Chris is not coming. Chris, can you hear me?
Yeah.
All right, so
I'm
you're
just
not using camera?
I'm just laying in bed, man. I don't want to get out because man, Tom Lee ruined my year, bro. I was having such a good year. I called Amit today to cry a little bit, because BMNR is like the thing that wrecked me. So Tom, I'm sorry, you cannot be on the good CEO list. You did us, bro. You did us dirty.
He's not even the CEO of BMNR. That's the worst.
Yeah, the chairman.
Some random dude. Who the hell's the CEO of BMNR? No one fucking knows.
Yeah.
All right.
The best CEO, in my opinion, was, well, technically speaking, just from a performance wise, Sundar. I think a lot of people going into this year were really upset. Google was not doing anything, blah, blah, blah. And then Gemini comes in and just starts, murking everyone. And year to date, my biggest winner has been Google. And I think Google's poised for another really good couple of years. I do think that Google might have like a bit of a pullback. If, let's say, the general market takes a turn, and it might be a little bit more pronounced, only because Google's valuation from like a forward multiple standpoint has expanded rapidly. So yeah, I'm not saying Google is gonna by all means like go down by a significant amount, but in terms of like crushing it, they're gonna have a tough comp 2026.
Maddie, who do you have for CEO of the year? Maddie, you're on mute.
I'm going to say Sir Peter Beck, the myth, the legend.
I feel like you're a little biased there, Maddie.
I'm a little biased, but the guy's literally putting rockets into space. So maybe biased, but he's doing some difficult shit, and I think he's executing very well. And I think 2026, you'll see a lot of the fruits of the labor that he was able to accomplish in 2025.
Okay, Steve, who you got?
I'm going Jensen. And I'm going Jensen for several reasons. The main reason is without Jensen, none of this would be possible. And his company held the market together at the end of November, 63% year over year quarterly growth, up guiding again. And I think it's going to be Jensen's world. We're just living in 2026.
I agree.
Heard it here first. Heard it here first.
Matt, are you in a hotel?
I'm in the Brotel.
Okay.
What's
There you
behind
go.
me? I didn't even check. That's
It looks like a
somebody's.
hotel.
That is a rag. That's not mine. I literally stopped in, got here, and I literally checked in. I don't know, not even 10 minutes. I went to the bathroom and got my laptop open, my camera set up, and I logged on. And now I'm just realizing that there's a dirty rag behind me.
I would be so sketched out right now.
Maybe somebody was living in here. I don't know. I got to check underneath the bed.
Wait, but you're not back in Texas yet.
No, fly back tomorrow. I was spending time with my mom, and that's why I didn't come on yesterday. And yeah, I was hoping to get it somewhere tropical, but I decided I'll take a staycation somewhere in north of Houston, I think.
Matt, you don't have to be ashamed of your jizz rag, bro. It's okay. We all
Hey,
have
man.
one.
I wish it was, man. I'm stopped up. Need to let it fly.
Someone started drinking.
I wish. I did have a monster in the car on the way here, though.
Okay, I have a question about Monster. I'm seeing so many ads for the white Monster. Is it any good? I've never had one.
You've never had a Monster?
No, I've never had a Monster.
If it wasn't milk, Steve hasn't had it.
No, Monster is better than Red Bull, but Red Bull gets you more energy. Monster to me is like, I don't drink Monster anymore, and I drink Red Bull with like Jaeger, but Monster tastes good. A lot of people think it's ugly. It's like not ugly, but it's like it feels ugly, like it tastes weird. I love the taste of Monster, but I don't drink it anymore.
I feel like it's the new Mountain Dew.
Yeah, but I don't think people drink it like Mountain Dew.
All right.
Yeah,
The
I'm a
next,
Red Bull guy, man. Red Bull just does it for me. Both, like my two favorite Red Bulls is just the original Red Bull and the watermelon Red Bull. Those, and I think the tropical one's good too. The one that's in the yellow can. I'm not a fan of like the other ones. I think those two are good.
it's going to be interesting. The next category is the next category that we're going to be giving an award out to. Best Company of the Year. And I wonder if this correlates to who we picked as Best CEO of the Year. Matt, why don't you go first?
Best company of the year?
Best Company of the Year.
Yeah, I'd be hard pressed to say anything other than Rocket Lab, but I'm biased again. I guess what people will say.
Mr. Chris Patel.
Sorry, my wife was asking what we want to drink tonight, and I was like, I don't really care, man. What was the question?
Party lit.
No, I'm not lit.
It's non-alcoholic.
It's non-alcoholic.
Best Company of the Year.
Best company of the year, Nvidia for sure. Like they really have outperformed all expectations. Their products are just on another level. Leadership from Jensen's great, but I think their roadmap that they've set for themselves is very let's just say it's very impressive. You know, I think I was actually kind of afraid that they would be dramatically behind once everyone else started to ramp up, you know, their other lines, like their TPUs and Amazon's Trainium and everything. And I do think that eventually is gonna start to knock Nvidia a little bit. But dude, to command that kind of market share, and anyone that you speak to in the field, like look at China. China just upped their order to 2 million chips. Just goes to show you, even the most deprecated chips like yesterday's chips on Nvidia are still very highly valued. So it just goes to show that the company and the products that it has is just on another level.
Amit, Best Company of the Year.
I mean, first of all, I appreciate everyone saying AK Media, but it's not even a company, to be honest. But I appreciate everyone saying that. It's Palantir. I mean, like, for them to go 300% up last year and then to do another 140% this year, expand the operating margins, fastest growing company outside of NVIDIA and AI. Obviously, the multiple is up there. People hate the multiple, they hate the valuation, but that's not Palantir's fault. They just keep executing. I think this year, all you got was relentless execution in a world in which they needed to show growth to justify the momentum they had last year. They showed that growth, and they showed the quality of growth that allowed them to continue expanding the multiple. So obviously there's a lot of good companies this year, but I do think Palantir was the best.
People are going to be shocked at what I'm about to say. Best Company of the Year.
Is it one that we all talk about often or no?
It's a tie in my mind, but I'm going to give it. It's between NVIDIA and Palantir, and I'm going to give it to Palantir.
Okay, there we go.
I'm going to give it to Palantir, even though the valuation is crazy, and I talk a lot of shit about the valuation. They were relentless, and this is the same for NVIDIA. This is really a tie in my mind, but take valuation out of it, take their revenue out of it. They went to war this year. They won. They changed the minds of everyone. And when I look at the customer growth and the US sales growth, the net dollar retention, they are proving that on the software side, outside of LLMs that everybody commercially uses on an individual level, they are proving that enterprise AI is real. And it is very hard for me to not give it to either them or NVIDIA. And I think because of what they've proved against all odds, I'm going to give it to them.
I don't think that's a bad pick. Someone said you were going to say Salesforce.
Yeah, no.
A lot of people said you would say Costco.
All right. So this is one we're going to spend a bunch of time on. 2026 trends to look out for. So I'm interested to see what the three of you are thinking about for 2026, how you think it's going to play out, what trends are going to appear, and where you're starting to look at potentially new opportunities or existing opportunities. So, Chris, let's start with you.
You know, one of the things I realized that I am terrible at following trends. I'm a I'm primarily a value investor that I look for opportunities, especially mean reversion opportunities. One of the things that I realized this year from just retrospectively is that some people can chase high beta names. For me, I just don't have it in me to do that, and so I think what I'm gonna do is just refocus on the things that I do know: balance sheet management, cash flow statements, going through real businesses, seeing if there's opportunities there, and especially if there's potential for mean reversions. I think that is where my core strengths lie. And I think instead of trying to be more of a thematic investor and trying to chase a trend that I don't necessarily have a strong conviction in, I think I'll focus on that. I do think that there is probably some like people that are going to chase some space related names, where I think people are like, oh, space is the next AI, especially with the SpaceX IPO coming out. So a lot of other space related companies are going to get significant bids, but once again, like, there's not a lot of space-based companies that have proven business models that are operating cash flow positive just yet. So whenever one that does follow that path and eventually does get to that operational ability to generate cash, I think I'll take a second look at that time. But as of right now, I'll probably skip out on that. The other trend that I do see eventually happening is there probably will be some consolidation among AI. And if AI growth slows down, then people are going to look for value opportunities. So I think value might actually start catching a bid next year and the year after that, where people realign from just going into growth to more value centric plays. So, yeah, like if you've been a value investor for the last 3 years, you have underperformed the market. It's just unfortunate. That's just how things are. But the market has been rewarding growth like crazy and basically just discounting value. So I think the return of the value investor is upon us.
Amit, let's go to you.
I think financials. Financials is going to be a big trend next year. I mean, it's crazy to say because the financials already did so well this year. Like every bank stock is just, I mean, just beating the Mag 7 like crazy. But M&A is coming back. There's a couple trillion in the private credit / startup ecosystem that needs to go public. That's going to be underwritten, which is really good for the banks. And then the deregulatory framework that Trump has been talking about for the past year that actually goes into effect next year. So not to mention rates coming down decreases the losses that a lot of these banks have on the loans that they issued at 2-3% 4 or 5 years ago. But if rates stay high, their net interest income still continues to be stable. So like, I think the banks should do well next year. That's definitely a trend that I think should be important. Healthcare, I have not researched enough into it, but you are seeing some people say AI, the next tailwind for AI to actually show use cases in the healthcare ecosystem. So that could be a trend. And then the other big trend I think that we got to look for is the relationship between rate policy and bond yields. Like, is this damn 10-year going to actually come down? Because if it doesn't, I really wonder if the yield curve keeps steepening, at what point does gold and silver continue to go parabolic? Does the equity market sell off because more people are afraid of what's going on in bonds? So I think healthcare, financials, and then like when we actually see mortgage rates come down, which is a function of the 10-year coming down, how that plays out going into 26.
Matt, where are you on trends for 2026?
I believe you'll see a reversal to an extent in LNG stocks. I do believe that we've hit a short-term bottom in TTF and JKM selling off, and so I think we'll see that piece kind of come in. I'm definitely not a believer in crypto by year end 26. I think in the first half or the first quarter, you'll see maybe some strength at potentially another peak before we actually go into crypto winter. But crypto winter is inevitable in 2026. So I'm really looking at what companies I would purchase in 2026 for crypto in the back end of probably throughout 27 and beginning of 28, it starts to have a bull run again. And I don't think all energy uh, is very bullish right now. Just LNG for right now. I think oil still has some time before it till it goes on a rally. There's just a lot of world uh, full of oil, but I could be completely wrong on that one. And I think there's still a theme around actual robotics and companies that can demonstrate operationality, I think. So like I've started to really investigate it. Maybe it's more along the lines of the fact that I'm really figuring it out. But you've seen Amit do extremely well with his private placement. You've seen a lot of others do really well, but I think we have yet to truly see the revenue generation come yet from that. And so I think we'll start to see how warehouse robotics, which are actually very, very much in stride at this point for places like Walmart and Amazon, I think you'll see those continue to do well, and companies that have a foot in that do really well. But I think you'll see throughout the year, and potentially it might be pushed into 27, but the thing that has yet to be truly figured out as of yet is the ability for robots to do very hand intensive tasks like plumbing, electrical work, etc. And so that either means one of two things. You're either going to try to modularize some of those opportunities to make it easier for robotics to really handle those things for homes, and or you're going to have the ability for robotics to actually have a little bit more digitization in their sort of movement in their fingers. And whoever can figure that out, I think is going to do extremely well. I've started to see some renditions, but I'm not exactly sure if they got it to a place where they could actually make margin on it. So they might have spent millions of dollars, obviously, potentially even billions, trying to get that sort of functionality in the hands. Will they have actually made it a bit able for folks to purchase it in a $30,000-$40,000 robot, and eventually hopefully get it down to like a $10,000 or $15,000 robot that would actually make it worthwhile? And so I think it's a race to 2030, obviously, before we see a mass adoption of, say, robots in homes or anything like that. But I think 2026 will be a step in the right direction. And then I think 2027 will then coincide with, you obviously have the robotics piece, but I think, and this is another hit that I think Palantir will take and own, is the internet of robotics, kind of like the Internet of Things, but really being able to maximize the data inflow that robots have to be coherent and being able to organize that. You've started to see that Palantir working with companies like Gecko Robotics and many others, and it just goes to show how great the Foundry platform is on data intake and being able to organize that. So prediction for that, which is 2026 robotics, and then in 27 the AI of robotics. Or not the AI of robotics, but the how you actually operationalize some of that data around robotics, which I think Palantir will play a big piece in.
So I have a few mini themes that go into one big theme. So the first one is infrastructure. And I think that we're going to have a constraint outside of chips. We already see it in power and physical infrastructure. And I think that we're going to see longer interconnection queues, transformer lead times, and gas turbine availability, which is going to expand CapEx deployment. And we're going to see growth in data center power procurement and everything with grid upgrades and behind the meter generation, which will be good for companies like Vertiv, Johnson Controls, Eden, potentially somebody like Honeywell. So I think that is the first thing going into efficiency with AI as larger companies utilize their strength and balance sheets and cash flow statements to deploy it on an enterprise scale. And that will go into the next thing of lower rates second half of the year. I will not be surprised if we do not get a rate cut until May or June. I do think we get 3 rate cuts next year. And by the end of the year, I think we see a crack in the 10-year under 4%. Then that rolls into, and I'm going to make some predictions. So that is one you can try to hold me to. We'll see if it comes true. I do think that that's going to hit plus 15% or more in S&P 500 earnings growth for 2026, which would be the third straight year of double-digit earnings growth. And I think a lot of that will be from margin expansion, from not just lowering the carrying cost on debt, but also expanding efficiency through operations, through AI and robotics, which I think takes the market higher, giving us an everything rally. And I'm staying in the lane of, as more companies deploy AI, the Mag 7 or Spectacular 6 ex Tesla will continue to aggressively increase revenue and cash from operations. And then the bottom 493 will gain margin expansion and earnings expansion through increased revenue and more efficiency throughout their workplace. I think 2026 is setting up to be an interestingly strong year.
Does
I think
the CAPE ratio bother you at all, though? Like at all? Like when you look at the sickly adjusted price to earnings ratio, like I have a tough time justifying it. I have done everything I possibly can to say, you know what, maybe there's a lot more market concentration risk out there with some of the biggest names getting the biggest attention. Then you've got all this passive index flows that are basically flowing into just a few companies. Doesn't that worry you that, look, one company or like a handful of companies are basically driving majority of the returns in the market? Like that's not on your radar?
I mean, look, I don't
before you answer that, Steve,
Yeah.
I'm opening the bottle. I'm starting. So go ahead. Got the Jaeger, folks. We're starting off with the Jaeger.
Amit just got peer pressured by the chat. I love it.
I definitely got peer pressured by the chat for sure.
I love it because I saw Spencer say when drinking. So,
all right, well, it's time.
So Chris, to answer your question, I don't like that some companies are 7% or 6% of the S&P. I would rather them be 4 or 5%. At the same time, when I look at those companies, there's still a lot of forward earnings growth for them. It doesn't make me as scared as it once would have. Amit is going to be sauced tonight. This is going to be phenomenal. Good thing. Are you taking off tomorrow, Amit?
There's no market open tomorrow, right? Yeah. So yes, we're taking off tomorrow.
All right. Have fun. So it's more for me looking at the PE ratio over the past 90 years. And while it is a little bit on the higher side, this is a much different market than pre-2000 and even pre-2010. This is not, I can't justify looking at the 70s and 80s anymore because that was a market without technology, pretty much. And it is just a much different market, much faster growth, and a lot more earnings and a lot more earnings potential. So we're, I think, in a fine place right now. And if we can see a lot of efficiency in the bottom 493, I think the industrials will catch up. And I think industries like energy can catch a bid. Same with conglomerates, and Matt's being funny right now. There's companies like Pepsi that have basically been sideways. Maybe stuff like Disney starts to work. So if we can get to a point where inflation continues to come down, rates continue to come down, and these companies streamline processes and expand margins, I'm not really worried about where companies are in a market cap weighted S&P fund at this point.
Yeah, I mean,
I definitely. Sorry, go ahead, Chris.
No, I was gonna say, like, the biggest companies are also the most profitable companies out there. The only thing I'll say is any notion that there is a slowdown in growth or an issue with credit, and I think the market does a Salesforce and Adobe on us, right? Where you have companies that are very profitable, it's just that their multiples get compressed because they're not showing as much growth as was previously expected.
The Buffett ratio as well, Buffett GDP ratio. If you guys look at it is like literally off the chart. I don't even know if it matters anymore, but there's definitely signals that we are the most expensive market ever. But to Steve's point, there's a reason: earnings growth.
I mean,
Matt, so just give me
Buffett-
1 sec, Matt. But
Well, I
are
was
we
gonna
the
say
most
Buffett
expensive-
retired today, so does it really matter anymore? Just kidding,
mean,
bad joke. Or,
But in all seriousness, are we the
isn't that-
most expensive market ever when the S&P PE is lower than several times previously?
Well, it depends on which ratio you look at, but yeah, I mean that's a fair point as well.
And growing at double-digit growth, and we're expected to have 15%.
No, I agree. I think the earnings growth justifies it. I mean, it has to justify the margin growth justifies it as well. But
Matt, what do you think?
I don't know. Yeah, I don't know. I think you see a lot of growth out of these S&P 500 companies, and so these generally result in a higher premium, generally. But at the same time, you've just seen them continue to grow more so comparatively to the rest of the 490. So it's tough to say that it's quote unquote more expensive, or is it just more of a balancing of the S&P 500 towards those 10 companies, which drags it up? But I think it's only going to get worse, because if you think about this, and Steve and I talked about this on a stream and walked through it like very intently, and maybe it was Chris and I don't remember, but I think one of the beautiful things about the one big beautiful bill that may or may not have a large impact on net income next year is that you can write off a lot of depreciation in the first year from capital expenditures and research and development, unlike previous years. And so what I think you might end up happening, and this is something that I like to look at, which is cash flow. Cash flow will end up being extremely great, but an EBITDA will end up being very great, but you'll end up seeing a pushing down of a lot of these companies that are spending a lot of capex to be able to help save in taxes. And I think you saw some of that with what Facebook did in the third quarter, and the market acted very negatively around that, because obviously they took like a $16-17 billion write-off that year, or that particular time, because of the infrastructure and the warehousing they were putting into effect, but it didn't actually impact their cash flow, if you guys remember. And so I think you're going to see more of that going into 26, people taking advantage of that early on, maybe even at the end of this year, when we have earnings at the end of January, early February. And people, I think, are going to run around with their heads chopped off, not really fully understanding that it's really just to help lower the amount of tax rate, or the effective tax rate that companies are paying, not necessarily an impact. I think when people fully understand that, if that's truly the case, dive in, because I think you're going to see a 10%, 15% pullback potentially, if that's the case early in potentially the first quarter or second quarter, when this sort of shit hits the fan. Or if it doesn't, then I'll eat my words. But I think that people are going to have a negative reaction, just like they did for Meta. But in reality, it's positive, because that means if they have less net income, they have to pay less in overall taxes, which means they get to keep more of that to reinvest more. And I think it ends up having a trickling down effect in the long term, but obviously doesn't look good in the short term. So that's just one thing I'd be cautious of. And I think Meta was a very good foreshadow of what can happen if people do that all in one quarter.
So, while we're doing this stream, there are people in New York that are wearing adult diapers because they have stood since 3 a.m. I saw a video about this today for the ball. Steve, as a New Yorker, can you explain why this is ridiculous? Because there's not any native New Yorkers that are doing this. It's all tourists.
100%. None of us do that shit, dude. None of
I'm
us.
a native New
You're in
Yorker.
Georgia, Chris. Shut up. No, I'm just kidding.
I have never gone to Times Square
thought it's messing
for
with you,
New Year's Eve. And I actually walked up to 6th and 52nd today, and I went right through Rockefeller Square. I tell you, The amount of streets that were closed off and the amount of people over there was crazy.
It's freezing, and they're just standing
it was
there.
29 degrees when I walked over there today.
Bro,
You never did it, Chris?
Not
never did it?
once, dude. Not once. The best place, if you ever want to actually have a good experience, is July 4th. If they're doing the what is that thing called? Not the East River. What's the other
Off
river?
the bridge?
Yeah, if they're doing it like a couple of years, they did the other side of the East River. If they do fireworks off the East River, you could go to like the Brooklyn Promenade, West Side Highway, not West Side Highway, the FDR. Sometimes they'll close it off and you can watch fireworks from there. But that's like the only thing that's like really big events that I would actually enjoy in New York.
Bro,
The other
how,
thing
how,
you could
how much would they have to pay you for you to do this?
fuck that. I'd never do it. One year I did hang out with my fraternity brothers where we got a hotel in Times Square. And so we were there for the ball drop at a hotel room that overlooked Times Square. But we were not like gonna stand in those stupid crowds and do like the whole like, New York song. Like what? We're gonna wait 24 hours to sing that stupid song. As much as I like the song by Frank Sinatra, not worth it. Not worth it at all.
But you have to get a spot like 24 hours in advance. That's the crazy.
Yeah, no, not worth it at all.
The reason it's amateur hour is because every place that tries to sell you on a package is 5, 6, 7x the normal prices.
Yeah.
And you can't move anywhere. If you're outside, there's nowhere to use a bathroom. You legitimately can't leave if you're standing outside for the ball to drop. And it is freezing. Like when I say 29, it was 29 during the day when the sun was out. It is significantly colder now with no sun, and it gets windy in New York City because those streets become wind tunnels. It is not fun. And
They would have to pay me a lot of money, bro.
that.
They would have to pay me a lot of money to do that because the uncomfortability of just standing there in the cold, surrounded by other people, just standing, can't even sit. You can't even I don't think I could do it.
There's
You
no
don't miss
reason.
it, Chris?
I don't know anybody that's done it.
You don't miss New York,
I don't
Chris?
either.
Do I miss New York?
Yeah.
There's some things I miss about it, but mostly no.
Dude, I told him to move back. I told him him and Steve could play poker every Thursday.
No, man. I love Georgia now. I'm an Atlanta guy. It's nice down here. It's peaceful. It's quiet.
He's trying to
I
move
can
the
go to the
mountains.
mountains.
Yeah.
So
Hot Chris out here looking for mountain estates.
And then Matt's on the phone with me today saying that he's going to look at condos or co-ops in New York. I'm like, you live in Texas. You'd be doing the reverse move. Like everybody's leaving New York to go to Texas. You want to leave Texas to come to New York.
That's a great idea. Matt, you should move to New York. You'll be close to us. We can have a lot of fun. I mean, at the end of the day, what's the point of having money if you're not enjoying it with your friends? I'm like,
Your boys.
you've got enough where, yeah, it's going to be expensive, but it's not like,
Imagine I pull a fresh and fit, right? I get a one bedroom condo, and the living area, it's just a podcast area. On Thursday nights, Amit and Steve come over.
Amit, how about we pool money together and buy a townhouse in the city? If you do that, bro, I won't move there, but I'll definitely like chip in and.
Oh, the point is no, we could do that, but the point is to get everyone in the same place. That's what makes it fun.
Well, that's what I'm telling you. Get a townhouse in the city, man.
It's like those TikTok houses that people do, except it's our finance YouTube house.
Yeah, you can do the AK Media house. You don't have to pay the rent that you're paying right now, which ends up being like a mortgage anyway.
That's fair.
But it's like I'm gonna end up fronting this, and
no, because the thing is, it's a write-off, right? You're using it as a business studio, like a.
Well, I was gonna say to Matt, if you have your LLC that you run, any side income you have multiple LLCs, Airbnb, all that stuff. But like, I don't know if you get a condo in New York, there's some tax advantage. I feel like you can make it work, and you would have fun. I feel like you would have more fun in New York than in Houston.
Don't do a condo. Don't do a condo. As someone who lives in a co-op building like Steven, would you get a condo or would you get a townhouse?
So if you have the ability to pick, a townhouse slash brownstone in the city is definitely the way you want to go, because you will not be dealing with the board. You will not be dealing with management structure. You will not have those headaches.
I want Steve to be the head of my board.
And townhouses in New York, they generally appreciate way higher than anywhere else. Like if you go to like some townhouses in New York City, that I still remember in Harlem back in 2008, 2009, you could have still afford a decent enough townhouse. Now, all of those brownstones, all of them, they're going for at least like 2-3 million a piece.
Oh, yeah.
Even like the crazy areas like Bed-Stuy and Bushwick, they used to sell those townhouses for like 500, 600,000. Now they're all like 1.2 to 1.7 million.
Dude,
You know, and then
Matt needs to be in Lower Manhattan with a nice condo, living the dream in New York.
Wait, why are we putting him in Lower Manhattan? You want to put him in Soho?
I mean, I just think he has to be close. Financial, he has to be close to the city.
listen, Palantir isn't at 8,000 yet, guys. Come on.
I mean,
Oh, dude, Matt was buying Rock Lab at 4. That shit is 70. So
Yeah, that's true. Matty, it's definitely gonna be Matt's gonna be the front guy for this.
all right, Matt.
What are you
So
talking
take a
about?
trip up,
I had
and we'll
Steve-
go.
If I had Steve's money, I would donate mine.
No, don't start using my lines. Okay, you can't
Hey.
do that.
Amit said he said it in chat yesterday. You're sitting on a good 2-0. Okay,
Dude, do not
no.
freaking use my lines against me. Okay, if I had your money, I would donate mine. Don't be using my lines.
You could blink and 7 figures would disappear. You wouldn't even notice. Okay.
Listen,
all right, are we taking another shot? Or
I mean, you can take one. I think you
I
should
wish I
come
had
up
something
here,
to shoot.
you guys got to drink with me,
and
bro. What's
we
going
can
on?
go around, look at some areas, and have a discussion.
I have some hot honey that my sister got me.
Bro, Matt, you have no alk?
No alcohol.
Oh my
didn't want to miss time with you guys, so I came straight to the.
You gotta
hotel.
Why don't you just order it?
you gotta DoorDash some alk right now.
You could DoorDash some.
All
How do I
right.
open this?
Chris, let me ask you this. If you were hypothetically, not to move back, but if you decided to get another place in New York and money wasn't an option, where would you get one?
I would do a brownstone on probably near Harlem. The area is getting better and better. You know, the island of Manhattan is running out of space.
Jesus.
It's probably not going to be renovated, so you're probably going to have to
Gold ring.
throw some money in some renovations. But if you find the right deal, they are really, really good deals up there. So right now, it's still it's still affordable enough that you could buy something out there. But yeah, I'd say probably like Harlem, maybe like anything above like 96th Street. If you can find something that, at a
So
reasonable
it's still
price.
close to
fix
the
it
east
up.
side.
Say that again.
Still close to the Upper East.
Yeah, I mean, you also have to remember the which train, the 2 is expanding further up. So a lot of that area isn't connected by the subway, but the plans are that it will be connected by the subway. So there's going to be a lot more people that end up migrating over there. So I think if you've got the money right now, that's a great place to buy, not just for to live, because the area is just getting better and better, but then also at the same time, from an investing standpoint, I think you could have at a minimum 7 to 8% compounded growth if you were able to buy up there. So, I mean, I remember when I first started like working up there, I saw the dramatic changes happening. Like it was the Upper East Side was getting, like really good, and then it really started to just kind of kept creeping up. So I think at some point it'll get there. Now, to be honest with you, there are parts of the area that you got to be a little bit careful with, because there are still a lot of projects in the area, and the crime rate around there is not exactly like low, but in terms of the area getting better over time, it's getting better. So from an investing standpoint, from a living standpoint, if you're a young guy willing to kind of watch your back a little bit, might not be a bad place to look.
Could be a minute.
Yeah, I mean, that's what I was telling Amit when he was telling me, hey, I'm gonna buy, get an apartment or whatever. I'm like, bro, just skip all that. Like, if anything, for Amit, because he wanted to be close to his family in Jersey, I'm like, just look for a nice, like, townhouse over in Jersey, like that basically gets you to the city in like 15, 20 minutes. This
Bro,
way you've
that's
got
it.
space.
It's a good investment idea, but it's like the lifestyle in that area would be trash because they're all the suburbs. But it's a good investment, which I do want to think about as an actual investment property next year. I just wouldn't want to live there.
So, Matt, I found a townhouse for you.
I'm ready for it, Steve.
Are you ready for it?
I'm ready.
All right. Because we all know that if I had Matt's money, I would donate mine. So, Matt, we're going to put you on East 79th Street, sir. Okay?
Upper East Side.
Upper East Side, and we're all going to hang out there and chill in your podcast.
That's by
studio.
Asphalt Green. That's a really nice gym. I used to go there.
Oh, there it
68
is.
million. Great.
I mean, that's 68 million?
That is 68 million.
That's
yes.
right by the freaking Central Park. The closer you are to Central Park, the more expensive these
It's
things.
right up against it.
6 bed, 7 bath.
Yeah, look at the property taxes on this thing.
I mean, look at this freaking thing.
This is you got to be worth a couple $100 million to do this. That's wild.
But you gotta have
Wild.
that AK, you gotta have that AK media money.
No, but this is literally only because it's near Central Park. I mean, it's not.
Amit, this could be your office, AK Media, right here.
If I was dropping 70 mil, I'm talking high rise.
Wait, isn't this Jeffrey Epstein's place?
I have no idea.
It looks like from the outside, it does look like it. It's very.
Chris looking at me like I would know. I don't know shit.
No, but if you were going to spend that much money, I want to be in a high rise overlooking the entire city. Like that's where the money
Like in
is.
See, you
Billionaire.
That's
say
overrated.
that,
That's
you
overrated.
say that, but then the elevator ride getting all the way up there
Yeah.
gets annoying.
It's not
real
that,
fast.
dude. I'm on a high rise. The elevator it takes like 15 seconds. It's not that.
So what are the taxes on this? Oh, 375,000 a month. Cool. Taxes actually aren't that bad. That
Dude, when Rocket Lab pays a dividend, that's gonna be Maddie's dividend every month. It'd be like it's 375 every month.
What
Can
would
you actually look at something that is achievable?
yes, I can.
Show someone like what someone let's say right now, if you are at the top 10% of New York, which is still probably like 500 grand a year.
I mean, you can buy a co-op.
Wait, top
One-
10% is not 500 grand.
Look,
What,
you
New
can
York City?
buy roughly the same area, just a little east. You can get a 1-bed, 1-bath for $449.
A co-op, look at the maintenance, still paying $1,100 maintenance. Screw that
I'm
nonsense.
just saying, maintenance isn't that crazy. $1,150.
That's fine, but still, man, like I'm telling you, look at a townhouse. Like I would rather buy a actual building that I can own and not deal with neighbors. Like, and the other
You
thing
said
is
something realistic. I'm giving you something realistic.
that's not realistic, dude. That's a terrible investment.
we need to buy the castle near Chris?
No, there's no castle. Well, oh yeah, I sent you guys that. There is literally a castle here in Atlanta. So I guess this rich doctor, they bought these parcels that are right by there. Let me send you the address. You can show everyone. 1 second. But dude, I had no idea that Atlanta had castles.
I'm gonna
Well,
put
I'm,
away.
not,
course
I'm
Atlanta.
not surprised at that
Dude,
at
the
all.
South is filled with them. Texas, Atlanta.
No, this one is a real castle. It's not a McMansion. It's like a castle.
Okay. Dude, even Jersey has like low-key castles. There are parts of Jersey that are so rich and they're suburban. And they have that type of vibe.
Yeah, housing is crazy.
Here it is. I'll put it in the private chat.
Yeah, put it in the private channel.
I really think my generation is not going to be the home ownership generation. And I'm not philosophically against it at all. I just think it's becoming unaffordable for my generation. Like,
It's very expensive.
until rates come down, bro, like, I don't know if this shit's happening.
All right, check it out. Does it have
Jesus
a moat?
Christ.
Sorta. Sorta. Yeah, just show everyone.
Yeah, Alpine, New Jersey.
Chris is moving? Is that what we're saying?
Wait, how much is this?
3 million.
That's crazy. 3 million's not even wild for that. Like, that's reasonable for something that big.
I'm telling you, it's a castle, dude. About
See, but
10,
the
10 15
problem,
minute drive to the city.
let's say you have like 2 kids. Let's say it's a family of 4. How could you
That's your
justify,
office.
how could you justify living in something so big, dude? I'd be like you wouldn't even see your family. They're just all over that. Like, I feel like a big house with not a lot of people is like one of the most depressing things ever.
100% agree. 100% agree.
Like, if you live with your wife and like, what do you need all this space? It just,
Which I'm not gonna try to buy it. I'm telling you, that's what I'm saying. That there's a castle. I don't want to buy it.
All right. Well,
Kind of move into Steve.
I mean, you could.
So when are we
All right.
doing the AK Media townhouse in the city, Amit? Come on.
oh, we all 4 should put some money together and like Matt knows the Airbnb business. We need to get him to help us understand how to do this Airbnb stuff.
I don't think
pull some
that works
capital.
in New York.
No, not in New York. Definitely not in New York.
Oh, okay.
We got to find a better place.
Jersey. Jersey allows for that, right?
I could be talked
Yeah.
into it.
Yeah.
Nice Jersey
ahead.
beaches.
Amit.
Asbury Park and what was the other one I was looking at?
What are we?
Like
What
an
are you,
hour.
Bruce Springsteen here? Asbury Park?
Hey man,
Boss?
I'm saying it's up and coming.
The boss.
I'd be down. I'd be down.
I looked at some places that were like an hour and a half away from Manhattan. So
All right, so I got a great idea. The
and they
4
won't
of
even
us
have to
get
drive. He just
Airbnb,
puts on his fancy Tesla.
and we
Yeah.
start a freaking YouTube channel around it. We just document the whole thing.
If
So
these
what is
guys,
this house?
if these
Like
guys
content
move,
house, but financial influencers?
no. He's saying like we document how like if you're starting an Airbnb business from scratch, like vlog it. I would like to do that, but you guys got to move up here. That's what will make
What do you
it
mean? I'm
fun.
already here.
You and me could do, but you and me are the only ones gonna be in the vlogs, and these guys are 25% contributing.
Well, Matty's got an empire. He's got a manager. He's got to be up here. He's got to move. Excuse to move. Put in a transfer at work.
No, Matt, I genuinely think you should move. Like Houston's cool, but like I feel like you'd be happier in New York. I feel like you'd have fun.
No comment on
I
no
told Chris
comment on
too. I told Chris too. He'll be happier here, even though it'll be way more expensive.
everyone's like come home. Yeah. No.
All right. 2026. What stocks are we watching that we either don't talk about or we barely talk about? And then you can say the real ones also that you're still very bullish on. But is there something you guys are getting more lukewarm on that you think can work next year? Amit?
I'll just go. The thing that's on my mind most recently is Zeta. I think it's cheap, and I wrote an article about it. People can read it, but I don't know. I'm trying to figure out why it is so cheap, and I think it's because the market just doesn't believe they can keep growing. Marketing is also very cyclical to an extent. But like when you do the math, dude, I've done the valuation like 5-7 times. I'm like, this thing should be $35 to $40 reasonably. That's not being aggressive. So yeah, that's on my mind as one of the names. Like I also do think, I know Grab was a loser this year. I do think Grab needs one catalyst and it breaks out. And I think once it breaks above $6.50, $7, that's when a lot of people get interested again. So I still think those two things.
Yeah, and I want to top on that. Like anyone that's sitting there being like, because I've seen some people dragging a bit, not a lot, but a few, being like, Grab was it's like, dude, you realize that Palantir, Rocket Lab, like some of these things take multiple years to actually get the true investment backing that they need, that institutional investors need to buy in, and eventually it starts to move. So I looked at Grab. I don't think it's a horrible opportunity, and I think that people need to recognize, and we talked about this yesterday or 2 days ago, Steve, like people sometimes just need to input a little bit of a patience, and they have to recognize, like, why did they buy it? Did they buy it because they thought it was going to moon in a quarter? Because I don't know if that's why Amit bought it. I don't think it was. I mean, I think Amit said this is going to be a multi-year opportunity that's setting up, and I think a lot of people are giving up way too early.
I actually like it when people get this upset about it, because I'm like, either I'll be wrong, but you can't be wrong after a year. Like it needs time to play out. So I've got some time to see if this plays out. And then when you look at the fundamentals, like this is only getting better and better. Stock price is not reacting. Eventually, stock prices follow earnings growth. So either they execute or they don't. I have a lot of faith they will execute, but I mean,
Yep.
this is the part of this is when you fucking buy. Like, if you believe in it, you have to put your money where your mouth is. And if it were, and you dealt with this with Rocket Lab from October 2024 to basically, I was looking at the chart. It was like October 2023 to early this year. It broke 28 in January. I remember that's when I started buying it. Yeah, it was basically a year and a half, 2 years. If you count 2021, it's 3.5 years of nothing. But
Yep.
you believed in it. You saw something. And so
All the numbers are going in the right direction in terms of the company performance, yet the stock was. I mean, you think about it, like there's so many companies, and I'm very curious to hear what Chris's thoughts are for the big companies he's looking at. But for example, you have multiple companies now that are public that have not nearly had the success that Rocket Lab had when it direct list or not direct listed it de-SPACed. And you have people being like, "Oh, I would pay 10 billion." Oh, it's like, dude, by the time Rocket Lab went public, it was trading at like $2.5 billion, and they had already launched 17 times, comparatively to the Fireflies of the world and other like people are sitting here like Chris even said it earlier, like he thinks space is going to be a big piece next year. I think he said that. Sorry if I'm misquoting you. And it's like a lot of those companies haven't had nearly the success, but they're going to come public at 15, $20 billion. It was super simple to kind of be like, look, if anybody's going to succeed, it's these guys. So, and then same is like you're seeing Grab's numbers go in the right direction, but the stock is staying kind of where it's at. It's like, if it was the opposite, then you could say, okay, yeah, but
yeah, a lot of this stuff sometimes just takes time, and I think the problem is all of us are so spoiled, including myself, because we all got to invest in these companies in the single digits in 2022. And obviously that was the market bottom. So all of them had the natural momentum to the upside. And then a lot of them are tied to AI in some way or another, or a big theme like space, and they all took off. But the ones that haven't really been tied to that theme, they just have good numbers, but they really don't have a lot of excitement. Those are boring. But I kind of like that it's boring going into next year, because it's easier to buy those that have done nothing over the past couple of years, realistically, versus buying something that's up 15x. And it's not to say buying the 15x can't go up more. It's just the risk to reward is a little bit skewed, especially if some of those stocks have aggressive valuations. So I think it takes time.
Yeah, I'm really curious to hear. I always like Chris's perspective on things because he always sheds like a different light that I never think about things. And so I'm curious if he's going to choose value stocks or if he's going to stick with some of the growth ones.
No, I mean, the key here is your portfolio has to be balanced between what you're going for and like where you are in your age, right? So the thing is, if you're in a high beta name that's basically riding a theme, that can correct 70-80%. You should not be buying stuff like that if you're like 55, 60 years old, because to get a hit like that in your portfolio is insane. But for someone like, Amit, for you, Matt, you guys are really young, relatively speaking. You guys have at least another 30 to 40 years of investing ahead of you. And the thing is, as you get older and older, you naturally become more conservative. You naturally go for like the Hershey's and the Disneys of the world rather than being in the exponential growers. And does that mean that, you are going to miss out on life-changing money? Yeah, absolutely. But by then, hopefully you've accumulated enough money where you don't need the life-changing money because you've already changed your life. Like, I'm at a point in life where the goal for me is no longer I need to become like, like super wealthy. I'm okay with maintaining my current lifestyle and not ever having to kind of give up on certain like pleasures that I have that I don't necessarily have to worry about, right? And the thing is, the prospect of me going into like, let's say, my 50s in 10 years and not having that same capital is probably more scarier, right? So for you and Amit, I'd say for the both of you guys already made it. You guys have made it at a very early age. So the goal for you guys should be, hey, we're still going to contribute a good portion of our portfolio to, to these thematic names that are really going to like outshine. And we've got enough years that we can be patient and do that. But then also to slowly, gradually put money towards things that are more fixed income, that are more value centric, that are not going to blow up your portfolio.
So what's your pick for next year? What do you think?
For me?
Yeah.
I mean, I'm looking at number one. I think managed healthcare should make a comeback, not like crazy comeback. They've already started to recover. You can already see that all the premiums have gone up. So Their profitability should, over time slowly recover. There's also the inflation theme that I think inflation is relatively dead. I did have a position in TLT this year that didn't work out nearly as much as I was hoping for, but the numbers are trending in the right direction. And if we do get, more rate cuts than expected, then I think the markets could come down. Now, here's the thing: there's all sorts of little things that keep throwing a wrench into the system. So, as an example, we've got like this price of silver just started to skyrocket, right? Now silver is an industrial metal, so if industrial metal goes up, the value of a lot of these companies, their inputs start going up and they raise prices. Now all of a sudden we've got a return to inflation again, right? Geopolitically, it's the same exact thing where, let's say, US attacks Venezuela and there's some kind of Russian response, then oil prices spike and now all of a sudden you've got inflation coming back. So this whole narrative that inflation is never going to come back or it's dead completely, I think is a risk that you have to be willing to kind of take. I don't think anyone can honestly forecast where something is going to end up. And I think this is why so many people were probably upset at Tom Lee now, because they're like, this guy was talking about these high numbers, finagled numbers. And, I still think that it's going to end at 7,700 by the end of this year. And when it doesn't happen, people are like, oh my God, what are you talking about? Like, and so this is where everyone just has to kind of, I don't know. Like for me, I think next year I'm just going to be a little bit cautious in the first half. If I see a major pullback, I'll probably lean into it and buy some of the names that I've been wanting to buy. But yeah, I think 2026 is the catch up year for Meta and Amazon. If you want like the most obvious plays in the market that you don't really have to do too much homework on, Amazon and Meta have both demonstrated that they have the ability to innovate and to actually grow their underlying businesses, and where they are in terms of valuation compared to, let's say, Google and all of these guys, you're getting a pretty good deal. So,
Man, Matt, Chris sounds like me the other night.
I mean, what's funny? Everyone on X, everyone's top pick next year is Amazon. Everyone, like literally every fund was like, which top 10 companies do you think is going to outperform next year? Everyone's like Amazon.
That means Amazon's going to shit the bed next year. That's
Amazon needs
that's what that
money.
means.
So, Amit, I'm not letting you drink alone, buddy.
Okay, finally, there we
All right,
go.
listen, I'm gonna get off and get on my camera stream. All right.
All right, bet.
Oh,
We got some
Stand
wine. Got some
Okay,
red wine.
your family owned a liquor store,
Dude, I can't name a single wine brand.
and
Hold on, let me
Amit,
try.
seriously, does this look
Oh, dude,
no, you think you're better than me, Steve?
Punjabis love Black Label, but I cannot stand it. Like I can't stomach it.
say Black Label?
Was that Blue Label?
Just
Blue Label?
asking.
Thinks he's better.
I'm just asking.
Thinks he's better than us. I meant thinks he's better than us. I don't like blends.
Right. So what is that? What is that?
It's New Year's. I grabbed a bottle of Blue.
Okay, I've had Black Label. I've never had Blue, but I can't do whiskey, dude.
And I will say this: the bottle of Blue is open. I would have grabbed just Gold because I actually like Gold better than Blue, but it's not open. So
I do like gold.
Johnny. This is what I would say: if I put Gold, which is Johnny 18, and Blue next to it, and you didn't see me pour it, there's a very low probability that you're going to be able to tell which one's Blue.
The problem with whiskey is I think you need to learn how to drink it to have the taste for it, right? Like people don't just like whiskey. Like you have to it's an acquired taste, and I have not acquired that taste at all.
There you go. I hear you.
I mean, people drink whiskey with water, literally.
Yeah.
Well, that's one way to drink it, or you can drink it straight or drink it on the rocks, like Matt.
Yeah, I can't do that.
He's a high flyer. That's what I like. No, I'm more of a single malt kind of guy personally, but
A little Highland Park, Matty.
Highland Park's not bad. When I first
A little Oban.
No, not the biggest fan of the O-Bonds. I've actually moved a little bit more towards the Elay type whiskeys there, Steve.
Wait. Is Jack Daniels a whiskey?
Yes.
Okay,
Tennessee, baby.
I'll be right back.
Amit's about to get on the sauce. So, Matt, to answer your question, I mean, Chris sounded exactly like me from the other night, and I would just echo everything Chris said. Pretty much, I heard most of it. It's funny how a lot of people are saying Amazon. I think Amazon needs, and look, I am in the camp that in 2029, Amazon will be a $6 to $7 trillion company, and I do think there's a lot of upside over the next 4 years. I'm not sure.
Oh, Tennessee Honey's a good one. Good to see you, Chris.
Chris got out of
WMC in the house.
And his mic worked immediately
on the first try.
On the first try.
We need to create a cow shoe market for that.
We're making big moves. I like the Tennessee Honey, Amit. Keep it going,
dude. This was one of the main drinks I drank in college, and again, I'm not a whiskey guy, but this drink, it has stuck with me for like 8 years.
You're not gonna be you're not drinking Black Label, bro. What's going on?
No, I was telling Steve. I told you, Punjabs, we drink the black, but I don't know how to drink it.
Yo, Punjabis, they love two things. They love either Black Label or Chivas Regal. Chivas Regal for some reason.
Chivas Regal. I haven't heard that name since I was in Trinidad.
Oh my god! Wow,
oh, he's got a fresh bottle.
Listen, what Chris was saying about inflation is completely true. I mean, look, nobody can accurately forecast a year or 2 years out, and a lot has to do with oil. So if oil stays at these levels between 55 and 65, inflation will be okay. But if we get an environment where oil is going back to 75 to 85, expect inflation to trickle up. So to say that inflation is going to stay at these levels indefinitely is just not intellectually correct.
Well, I mean, the one good thing that we have going for us is that shelter inflation is coming down. And the thing is, it's going to be very, very hard to move shelter in the upward direction. And the reason why is very simple. With rates where they are, with prices where they are, and where consumers are in terms of their total ability, like to refinance debt, there's just not going to be a lot of places where people are going to be able to get a lot of capital appreciation. So for me, when I try to look out 5 years into the future when it comes to real estate, I see real estate underperforming as a whole relative to its past performance. So if you look at real estate, on average, it usually grows between 3 and 4% compounded.
I have some breaking news.
What happened?
Some breaking news, dude.
Who died?
No, I mean,
no,
you won a Porsche?
No, you didn't.
Oh, what?
Stop it.
I mean, seriously?
Serious?
It says you fucking won a Porsche.
Holy shit.
Bro, that's some insider trading bullshit, bro. There's no way you get out of here, man.
I'm like low key shaking, right? I'm drunk and I'm like,
yo, seriously? You want a Porsche?
Wait, how much is a fucking Porsche? Can someone see how much?
Hold on. What type of Porsche?
The 911 Carrera?
They said we'll send you an email with more details. We'll get your address in the coming 2 weeks. You'll be able to. What the?
I don't believe you. I'm sorry. He's fucking with us, dude.
He's not messing. He wouldn't do that.
No. Go like this. Close it and bring it back up.
Chris, I'm on a fucking Porsche. Like, what do you want me to say?
No. Bring it up. Close it, and open your Robinhood app live. Go ahead.
Okay, so hold on. I'm going to day 2.
Yeah, just go.
That's number 6. That's the reveal.
Uh-huh.
And when I open that shit, this is what you get.
No, see, that's where he otherwise he would press it and we would see it.
No, why would he? He's not messing with us.
No, he's messing with us.
Wait, hold on. How much is a 911 GTS? What is it called?
Oh shit, baby!
You want a GTS?
130 grand?
Congratulations.
Dude, go play the fucking lotto.
Amit, seriously, dude, you might as well, man. Before the night is over,
Leave
go
right.
fucking
I
bet
mean,
the
no,
money,
you should
bro.
not drive anywhere, but you need to go play the lotto, sir.
Bro, I'm putting all this shit in. I'm selling it and putting it in Grab. I'm buying like 50,000 Grab shares at this point.
Can I buy it from you?
This would be awesome if I had really won it. The problem is it's
Damn
a
it.
fake screenshot, and that's
I
why.
fucking know it.
I knew it. I knew it. I was like,
You
got him.
he got y'all, not me.
Got him.
I was like 50-50. I was like, I don't know.
Yeah, it's going around on X. I was like, I gotta do this. There's no way. So,
Yeah.
I would have bought it from you though.
See, I wouldn't have thought you would have done that to us, Amit.
Oh, I had to do it to you guys.
Oh, Steve's legit
What are you talking
disappointed.
about? I had to do that to you guys. Like, I had to.
What did you win then?
Freaking believable.
Okay, now if I actually win, no one's gonna believe me. Chris, you fucked it up. Chris, you forced me to like show that you messed. If you had not said that shit, there would have been less doubt.
Chris has been.
The minute I saw it, I was like, wait a second. The thing is, you even tried to be like, look, and then you put it away, and I was like, yeah, that's it. We got him.
Now if I actually get the Porsche, I can't even show you guys because
Freaking Amit.
Dude, a car like
Anyway.
that it's nice to drive once in a while, but it's a hassle to deal with. Like the
No,
insurance
it's
on it.
great if you
I would
live in
sell
the
it as soon
country.
as I get it, dude. I'm not holding on to that shit. I'm
Yeah.
selling it immediately.
Like it's so low to the ground, you worried about scraping the bottom all the time. Screw that, man.
Anyway, you were talking about real estate, Chris. I think.
Yeah, I think real estate underperforms in some markets. So you have to be very specific. There are markets where I think real estate will appreciate, significantly more than other places. But I think as a whole, shelter as an investment, we're likely to see either flat to maybe 1 to 2% growth on total shelter return for the next 5 years. And this is not to say that like there's going to be a giant market crash. It's just if you buy a home that's like 700,000 today, don't expect it to be $1 million by 2030. Like it's probably going to be closer to like hopefully by like 700 by 730. Yeah, I mean, like not 730, like around 730, 750, which is fine. That's what gradual inflation of shelter should look like, so that people aren't completely like destroyed by unaffordability. So
when you say 1 to 2% to flat, do you mean 1 to 2% annualized, or do you mean?
yeah, 1 or 2% annualized. Yeah.
Which to put in perspective for people, right? Like it depends on what you're looking for, but I think a lot of times what people think is like that 1 or 2% annualized might not seem like a lot, but if you're leveraged 5 to 1 because you're putting a 20% down payment, it actually can be a pretty decent return on your investment. So it really just depends on what you want, right?
Yeah, no, absolutely. So the way that people need to understand when it comes to real estate is that if you're able to leverage the property and you're able to get cash flows out of it that are exceeding your monthly payments, then it really ends up being very, very valuable long term, right? So as an example, like let's say you bought a house that's, just to keep numbers very simple, $100,000 house, you put down, let's say 20%, so you put down $20,000. If that house goes up in value by, let's say 2%, right? That means that it went up by $2,000. So if you only put down 20,000, right, you made a 10% return on your money because it went up by 2% of the overall house, but your initial investment was only 20,000, which means that you made a 10% return, right? Now, here's the thing. There's other expenses that go into that house. So you need to have cash flows to offset that money that you're basically paying for the interest on that mortgage. So if you have a 10% mortgage and the house is, you bought, you paid 80,000, that means that you need to come up with $8,000 just to, like break even on it. And then whatever the capital appreciation that you're getting is what's going to be added to the mix. So the key here is you have to, if you really are trying to buy for capital appreciation, you have to understand what you're doing. Like when it comes to cash flowing businesses, cash flowing property, it's completely different because the unit economics are dependent on, like occupancy levels, what kind of rent you're going to get, what kind of cap rate you're going to get, and then the appreciation. What is it, $3 in Bitcoin? Yeah, I believe that. For sure, I believe that. Gin? Yeah, I'll put some gin in it for me. Thank you, honey.
Got $3.46 of Bitcoin, boys. Did not win a Porsche. Did not win a Porsche.
Yeah, it's really good. Thank you.
The gin.
Yeah. Um,
He's the best. We all need to find a lady like Boss Lady.
dude, I'm telling you, one of the best parts about I say if you find the right person in life, that is the best win. So as much as you guys are winning in the stock market and all that, I mean, well, I'm winning too, but I think the best part that I have above, I have an amazing wife. I'm lucky. Steve, would you like to say some nice words about your wife as well, so that you don't end up sleeping on the couch behind you?
Yeah, well, that'll be pretty hard. She's nowhere near me, but yeah, my wife's amazing. And
Yeah.
I said the other night that one of the greatest money hacks is finding a partner that has very similar goals, and you both of you can be on the same page. I mean, absolutely phenomenal. My wife's amazing.
Steve's wife is hilarious too.
Amit got to hear my wife the other day. We were on the phone.
I was telling him about the BM&R shareholder letter. She was like, "Why the fuck is Tom Lee sending us this shit?" It was hilarious.
How much does my wife curse, Amit?
Dude, she's like
maybe more than me.
She's a New Yorker.
Sounds like she's like a New Yorker.
Is she Italian, Steve?
No,
she's not Italian. Greek?
Romanian.
Oh, dude. Good luck.
No, she's hilarious.
No, she's awesome.
Yeah.
All right,
Yeah.
so we gotta get back to awards, bro. What else? What else we got for 2025?
Before we get to awards, I want to show you guys something that came out today, stock related. All of JP Morgan's top stock picks for 2026. Are you guys ready to shred this list?
Yo, let's go.
We're
I know the
gonna
cruise lines are on there.
we're gonna see what we agree with and what we don't agree with. Came out this afternoon. All right. Allstate. Alphabet 385, I can actually see happening.
I can see that
Yeah.
too. I can see
Yeah.
that.
Dude, if Alphabet hits 385,
Bro, I mean, Buffett's in now.
I need to move to New York. Thank you, Doug. You're the man.
Damn, Doug. You hooked us up twice.
Yo, Dougie drops dollars.
Thanks, Doug. Appreciate
Thank
that,
you
man.
for Dougie and everybody else. And Dougie, I have a special surprise for you when you come to New York in a couple of weeks. You and Maddie and everybody else. I have a
Leave the gold suit at home, though, Doug. Leave the gold suit at home.
No, he's got to one up the gold suit now.
I love the gold suit, dude.
the gold suit.
Hey, man,
Yeah,
if you can
special
do it,
surprise for
flaunt it.
everybody that's coming.
If you can do it, flaunt it. But now, Doug, we need to get lunch or dinner when I'm back tomorrow.
AT&T 33 is nothing crazy. I mean,
Boeing
What?
240.
Broadcom 475. Can that happen?
We need a bull market, but we need like a really good market for that.
JP Morgan's basically telling you at this point you're going to get a bull market. I mean, they got Carvana at 490.
Dude,
Yeah, but the
Caterpillar
thing
at
is-
730.
Thing is, do we trust the banks and their bullishness right now? That like
Or are they
probably said that
unloading
shit-
on us? Are
They
they
probably said
unloading
that shit
on us?
going into 2022. I'm sure they probably had these. targets.
Maddie, Devon Energy.
I sold Caterpillar at 240. And
Damn.
if they actually get to 7,
Dude,
30.
Dougie at 400, Dougie was screaming about Caterpillar. He's been on this train for a while.
Look, Entergy, that company is working with Meta for, like the Hyperion data center.
Yeah.
So Entergy is doing all the energy for it, like basically making the power plants and everything for it. GE Vernova is pretty much one of like 2 companies that provides the gas turbines for the industry.
Ralph Lauren, really.
You see my baby here?
Oh,
360. And it was even right on with where you're at, Steve.
If that goes to 365 next year,
Thank you, honey.
it's hard for me to see that happening, but it also isn't. That'd be a massive move. Massive.
Why is it
Our
put Schlumberger there at 43? Isn't it only like
It's like 38.
Palo Alto 235. That's not crazy. Lending Club 25. They have Lilly at 1150. That's not really a lot of upside. United at 150. Where's United right now? UAL. Dude, United is I'm so annoyed. I've been on United flights for my entire life. I feel like
Is
that's a repeat.
Viking the cruise line?
No, that's the
Viking Holdings is the cruise line.
it is? Okay, so it's not the
Viking, yeah, Viking Therapeutics is the
That's right.
is
Okay.
the pharma.
Visa 430. That's nice.
So where was JP Morgan's S&P target? Were they 7,700 for next year?
Williams might be
Steven,
up your alley.
can you send me the link to this list?
Yeah. I'll put it in the private chat right now.
Let me see. I think JP Morgan's at 75.
Yeah, Steve, do you know much about Williams? I know it might be up your alley, guy.
Williams, a little bit. I like for the smaller ones, Plains All American.
Okay.
JP's at 75. Yep.
Chris, it's in the private. And if anybody wants the link to this, I'm putting it in the live comment section right now. So you can go to Seeking Alpha and find it. So that's the link. I'm actually going to find JP Morgan's price target right now because I want to see where they're at for 2026. I think they're at 7,700.
All right, I'm doing the honey.
Elon. What's going on with X, Elon?
I'm doing the honey. I'm going to chase it with Coke. But I'm doing the honey.
All right, Wall Street Engine.
This is 4th of the night, bro.
You need to slow down, sir.
See this thing. I don't drink, but when I do, I actually drink. But I usually don't drink.
Drink for the taste, not to get lit.
No, the taste. What's the point? Like, the taste is irrelevant. The feeling is why you drink. Who the hell drinks for the taste?
Me?
You drink because it tastes good?
I think Scotch tastes great.
No, I drink to get lit.
While I'm finding this, did any of you watch the silver video I sent?
I had a chance.
No.
To.
Dude, silver's a meme stock.
No, but I sent something with a bullion dealer that's legit. All right, JP Morgan is where the hell are they? 7,500. They're not even calling for a bull market, and some of their freaking price targets look crazy.
Bro, I feel like all these analysts just fucking go in their ass and try to get some number out. Like, I don't know.
Everyone,
Look at Bank of America. They're saying nothing's going to happen next year. 7,100.
7,100 is what? We close at 6,850.
What is that, like 4%?
Yo, can you mute Chris? He freaking is typing on these freaking keyboard.
Wait, hold on. Chris, before you mute, do you have a mechanical keyboard there?
The whole world can hear him fucking typing.
Yeah, I do. I love it.
Why do all you guys, like everybody I know likes a mechanical keyboard? Am I the only schmuck with a freaking membrane keyboard?
It's some ASMR shit, bro. He likes the sound.
No, I know exactly what he's got. He's got a mechanical keyboard.
Dude, these things are awesome. Once you get it, you'll understand, man. The feeling that you have on your keys, like when you, it's amazing. I love it.
And I did get one with my nephew.
I love it, dude.
It's a typewriter. That sounds like a typewriter.
I don't care.
But everyone says 10%. Median is 7,700. Average is 7,635.
All right, so let's roll into our S&P 500 predictions. Amit, why don't you go first? Where do you see the S&P next year?
I don't think I'm smart enough to predict it. I really don't. And I also think the target is rather irrelevant. It's about the directionality of the trade. Like,
all right, just give us both.
This is what I love about Gemini. Check this out. So I just literally took your thing and uploaded it to Gemini for like 2 seconds. I didn't ask it any other questions. I was about to, but it did everything that I wanted to do. Check it out. So all I did was just copy, edit, paste all of them in here. And basically it gave me all the potential upside and everything. And I can transcribe this to like Google Sheets in like 2 seconds. So right here, like all of them, export to Sheets.
Dude, the integration with Google is really what makes it so much better.
Sorry, let me just share screen and share the entire screen. Boom. Check it out. Now it's all in Sheets. Everything's here. Potential upside.
Can you filter by potential upside?
Yeah.
Thank you. That is a product suite that has network benefits with Gemini over all of them.
Yeah.
Huge benefit.
Huge network benefit right there.
So the least upside is CRH, PLC, whatever. And then the most
No, for some reason that didn't work.
Hold on, yeah, potential upside.
You might have to get rid of the pluses.
You gotta get rid of the plus on it for some reason.
Oh, hold on. Let's see. Oh yeah.
Oh, or you got to put 0 in front of the 8 and the 7,
Okay.
or get rid of the plus, either one.
Control
Oh, yeah.
F, and what I'll do is I'll do plus this, and I'll just remove all of them, right? So plus, and then replace with is nothing, and then replace all. Done.
Perfect.
Now A through Z. Okay, there we go. 57% for Bright Horizons. GE Vernova is 57. Guidewire Software. I'll have to look at this.
Celsius.
Celsius is
Celsius. They have a wow.
Look at my baby Salesforce, 37.8% they're calling for.
I'd have to relook at Celsius because now it's fully integrated. I think if not, it's about to be fully integrated.
Yeah, with Alani Nu.
Yeah.
Yeah, but going back to the S&P targets, dude, I really do think it's irrelevant because it's just. I mean, there was a good episode that I think the Compound did on this, and they basically showed how, like, over the past 30 years, every analyst has just predicted what the market would do, which is 8 to 9% a year. You have some that are extreme to the downside or upside, but they all just, the market compounds at, call it 10%. Every analyst target every year is 10%. Like, the number is literally irrelevant. What matters is, like, are they bullish or bearish? And Bank of America is bearish. It's obvious. Fund Strat is bullish. And I think that's what matters more than the number itself.
So let me do this real quick. Equals.
I'm shocked that they have DraftKings in there with upside. I've looked at DraftKings so many times, and I cannot get behind this play.
Jason likes it. I do think DraftKings is not dead. I mean, they are different than the prediction markets, but long term, I think prediction markets are just so much of a better product.
What's the PE?
But also, I don't know if I want to invest in DraftKings. I mean, literally, they lose if their customers are right on bets, and like, if their customers happen to get a win streak, like, they take losses, which is just.
I mean, look, somebody needs to come on to talk to me about DraftKings that actually understands their future, because when I look at the actual numbers, their cost of revenue is 60% of the business.
Yeah, their marketing was crazy. They spend
and running the company, before we get to anything else, leaves them in negative operating income. I mean, they're a company that just their back office selling general and admin expenses is $2 billion.
Chris, I posted the code in the private chat.
It's crazy.
Formula.
Thank you.
Okay, I have an idea after Chris shows this for a topic.
Okay.
It's like an award. I have a good idea. I think we should do this one.
Are you back in
Not work? Oh yeah, double. You have double.
Yeah, I know.
Double equal sign as well.
There you go.
There you go, my guy. Hell yeah.
There we go. So, Boeing, Roku, Revolution Machines, DraftKings. So, is it because they're not profitable or they don't have earnings yet? Probably.
That's one thing I need to look at. I have a spreadsheet that I have for like all my positions.
Yeah.
I need to look through like what every single one of the symbols are.
Yeah. You have to find out. Do you have the other ones by any chance, Steven? Like the other banks, what they're projecting these targets to be? Because then what we could do is cross-reference them.
No, it just came up in the news feed on Seeking Alpha for me, so it's the only one on there. It just happened today.
Got it. I saw one with like Morgan Stanley. Let me see if I can.
Yeah, but they don't cover all the same stocks. Like if it was S&P, it was different, but
yeah,
they all have different lists. Yeah.
I gotta tell you, I'm annoyed that people are getting so bullish on Citigroup. Where the hell was everybody at 40? Like Citigroup was the easiest big bank to buy when they were trading at a huge 50% discount to tangible book value.
I remember when we were helping Tevis with his dividend portfolio. That was one that you chose.
Yeah.
That was a big one.
Truist has done well too. Truist, all the regional banks have recovered this year, man. They've all gotten back to their somewhat good ratings. Like Truist, I think is at 47.
City's up 60%, dude. Like,
yeah, Truist is at 49. It was almost at 50 the other day. So literally 20. It got cut in almost half when that whole thing happened with the great financial crisis.
yeah. Okay, I have a topic. It could either be super likely or it could be unlikely, but what is the biggest acquisition you think could happen next year between two public companies?
Ooh, I like that one.
In the chat as well. It doesn't have to be realistic as if it can be approved. It should be somewhat real. Like it shouldn't be Apple buys Netflix or something crazy, but like, what do people think?
Apple buys a Nike.
It's actually, that's not crazy.
Yeah.
I don't know if they would want to have that type of business on their balance sheet, but it's not crazy.
No, I wouldn't think so. I mean,
But-
if you're asking me like consolidation wise, which industries could theoretically benefit from consolidation? Big tech is a big no-no. Like big tech is probably not going to be allowed to buy bigger like other companies that could make it even bigger. But I think there's probably going to be some consolidation in the cybersecurity names. So
I think that's fair. Hood acquires SoFi. I don't think that's going to happen.
Whoa, didn't I say that like when SoFi was like at $4 billion, I was like, they should just go ahead and try to buy Robinhood.
Yeah, but I never liked the idea, bro, because the reason Hood gets away with everything is because they don't have the banking charter.
Yeah.
Which helps them so much, because that's the shit that holds their multiple down, theoretically.
True.
And regulates them.
Ooh, I got a good one. But one of the companies is not public. But I got a good one.
Okay.
And this is not me trying to be funny. Elon says, screw everybody, I'm buying Verizon.
You know,
SpaceX acquires Verizon.
I
The
think
problem is Verizon has so many dividend like investors that I'm not so sure and they have a lot of debt too that would lead me to believe that Elon wouldn't necessarily want that, you know. But it does fit into the space theme because then you have like a connectivity conglomerate.
Or they buy AT&T. I don't think they buy T-Mobile or T-Mobile because T-Mobile and Sprint are together. I think they buy AT&T or
it would be too big of a regulatory hurdle, man.
Like, by the way, side note, I am changing the thumbnail on the stream. Wait till you see what Chris is right. Gemini is freaking legit. You ready for this? This is gonna be the new thumbnail. I'm updating it now.
That's awesome.
It's awesome. Gemini is so legit.
Dude, I think I'm getting better at drinking. I didn't even need chaser for that one. I didn't even need to.
Amit's getting lit over there. I love it.
My throat is on fire right now, but I didn't even need chaser for that. I'm getting good at this.
Has anybody tried Howlerhead?
No. Okay, let me pitch one.
Sorry, go ahead. Emmett, go ahead.
I just randomly thought of this. What if Disney buys DraftKings? Okay, hear me out. DraftKings exclusively advertises on everything sports related, and I think 90% of their ads are on ESPN. I mean, what if Disney just swallowed up DraftKings? They got some growth. Like DraftKings is growing like 30, 40%. They use their media conglomerate to push DraftKings, and they're just a funnel to get people into their ecosystem. They don't have to change anything. They let it operate. It's just all the money DraftKings is paying in ads to ESPN, which is, I think, it's a sizable amount of their net income. I mean, just combine both. Now, Disney would become a gambling company at that point, but at least they'd be growing because they're not growing right now.
So I thought the same thing about them not growing. I actually was forced to take a look at Disney the other day. The number, because Evan's in it, and Evan was on the stream and he was talking to me about it. Disney actually looks more interesting to me than it did last year. And I have to do a deep dive on it. They've expanded their cash from operations so much, and I did not know that because I don't follow it.
Dude, I will never buy Disney. To me, it's a failing. It's an irrelevant failing brand. There's zero reason to be excited about it.
Dude, Disney still makes a lot of money. Like I know you're gonna say like, hey, it's a dying brand, but they still have some of the best IP ever that still sells out. They're
okay, but in 10 years, is any of their IP going to be really relevant enough to be monetized?
They just did $1.6 billion on Zootopia.
I'm talking about the actual legacy IP, not Zootopia.
Yeah. Do you know how many people still watch? Like, do Elsa? What is it called?
Yeah, but Elsa's not new. I mean, I that was my question. Is Mickey Mouse, Minnie Mouse, Donald Duck relevant in 10 years from now?
No,
absolutely not.
No. So
neither is Mandalorian.
Here's the thing. Yes, you're.
Oh, come on, Baby Yoda. Come on, don't do that to me.
They're not all relevant at the same exact time, but dude, they always have new stuff that's coming out. Like, dude, I still have like stuff that I buy from my nieces and nephews. You know, they're like Frozen stickers and Frozen this. The IP is way more valuable.
Well, in 10 years, everyone's gonna let it go when it comes to Frozen. Like,
that was a good one. Good job.
that's the honey.
See, drinking Amit is funnier than sober Amit for sure, man.
No, sober Amit would have still made that joke.
We got another Grogu right here too.
See what I mean? Look at he's buying all these Grogu dolls, and then on the other hand, he's like, "No, Disney's not gonna work out, bro."
Oh, but hold on. What's Disney stock last 5 years? What is the?
So let me bring it up.
Dude, this thing's down 30. This is a Nike. Tell me this is not a Nike.
No, the stock sucks over the past decade. Okay, it's up 14.5%. It sucks.
Hey, look.
But
They made some terrible moves when it came to acquisitions right before COVID. That is what screwed them over.
Yeah.
If it wasn't for that, there would actually be in a much better position. Their acquisition really jacked them up. And then remember, they have a massive consumer-facing business in their parks business that generated a significant amount of cash flows. Same thing with their cruise lines, generate significant amount of cash flows.
Look at
during COVID, all of that shit was shut down.
Look now it's back up saying, because over the past several years, they went from 9.8 to 13.9 to 18 billion cash flow. And on a free cash flow, they're at about 10 billion right now, which puts them at 20 times free cash flow, which is actually not expensive.
Yeah. Check this out. Look, let me just share it with Fiscal AI. I know you're cheap as hell. You won't get it, but.
Well, one sec. I want to show the thing Chris hates the most. Their earnings growth projected is double digits also, which is interesting. And
yeah, because they're buying back shares now. And they're doing dividends.
Forward, not bad.
Yeah, and they're paying down their debt at the same time. Sorry, let me just stop and then share the other one. Okay.
Disney, I don't know what turns them around. And you're right. They bought Fox in 2019 right before COVID. They could have got a way better deal if they had waited.
Obviously, yeah, and then at the same time, they had really good comps with Avengers. And ever since John Lasseter and what's his name? This Kevin Feige? But some of their major guys left because they went a little bit too crazy on their stuff. That's when they really started to screw themselves over because they haven't had a lot of hits. But Disney Plus membership has grown significantly. Their linear TV business is sort of on the decline, of course, and I think there's still room for it to go down. But in terms of like how big of a drag it is on their earnings, it's not that big of a drag. Their parks business is doing really well. Their cruise line business is doing really well. So it's generating cash flow. So like if you just look at cash from operations, right? Hold on. Their operating cash flows, they're almost doing 20 billion in ops cash on a 12-month trailing basis. And at the same time, they're doing repayment of long-term debt and repurchase of common shares with that cash flow.
How much debt do they have?
Let me see. Total debt. Assets, liability.
35 billion long term.
Yeah, that's nothing compared to how much cash flow they generate. Look at that, and then it's trending down.
And
Ever
Amit,
since that
their
acquisition,
EBITDA is 19.4 billion, so it's really not a big outlay on the interest expense. The interest expenses are 1.8 billion, more than
Yeah.
enough to cover it.
Would anyone actually buy Disney next year? Like realistically, I don't think anyone's buying this.
I mean, look at this chart, dude. Look, cash flow is going in one direction. It's going up, right? Cash from operating activities. At the same time, their debt load is going down.
Yeah, but I don't think there's a growth story here. I really don't. Like a
Yeah, but the thing is, like, you don't need everything to have like exponential growth, man.
no, 100%. But 5 years down 37%. At some point, it's got to flip.
Yeah, that's the whole point of investing, right? Which is you're waiting for that flip so that
No,
people
but what's
recognize
that flip?
value.
That flip is going to be content, and I don't think they have enough capacity to make relevant content. It's not the cruise business, and not the parks. It's got to be a Zootopia 2 like 10 times a year.
No, you'd be surprised, man. I mean, right now their earnings. Look at their earnings. It literally went in from $1 to now almost $7 a share.
Yeah, but since
I mean,
when? How long are you comparing this?
2 years, 3 years.
I mean, it's decent growth. I just think if Netflix doesn't have a Squid Games and a Stranger Things every year, which is why they're spending so much money on Warner Brothers, they're irrelevant. They die. This is the problem with media companies. Disney's in a better position because they've actually monetized the IP, but
Yeah,
I don't know if they
I mean,
have great IP.
Look at this like issue that they dealt with. Like here, March 2019, they did that acquisition of Fox, and then ever since then, their debt absolutely exploded. And then at the same time, they got hit with COVID, and then their debt was right here. Their ops cash probably got cratered because of all the issues with COVID. And then since then, operating cash flows have basically been going up. Their debt's been going down. Their earnings has been going up, and the market maybe hasn't recognized it yet from a stock perspective. But that doesn't mean that it's not like where's the stock price? Let me see. Stock price is around 113, right? Basically been flat, even though earnings have been growing. I mean, this is what you look for breakouts. Just do.
Yeah, I'm not buying Disney. Uber,
I mean, that's fine. It's not for everyone.
So, Maddie, what's your prediction for Mitt's question about potential acquisition for next year?
I think there's two American oil and gas companies that are still ripe. There's a lot, but I think the biggest ones that are still on the table for oil and gas, particularly, is Enron Oil and Gas, EOG Resources, and the other one was Diamondback still. And I think the only thing that I believe might cause pause for not wanting to acquire Diamondback specifically is that Diamondback is heavily focused on West Texas only, and Chevron and Exxon already have dominant positions in the Permian. And so that could be a positive or negative, right? You never want to be too concentrated in one particular area, but at the same time, if you think that the Permian is going to be the largest oil and gas field in the US and you're getting towards peak, having a dominant position can allow you to truly do that infill and take advantage of larger margins going forward as we get into the 2030s and the Permian eventually gets on decline. The thing that's beneficial and also potentially a con associated with EOG is EOG has a more international portfolio. It has things in the Utica Shale, it has things in the Eagle Ford. That may or may not be positive for Exxon or Chevron. So it really just depends upon if they want to continue to acquire other onshore assets. But I think that both are about $40 to $50 billion and potentially worthwhile and great producers. They're really efficient and they're trading only at a 10 PE. And so if you do see oil really take a tumble into the 40s or even 30s for an extended period of time, it could give them the opportunity to pick those up at a lower price and really take advantage of that if oil does go back up to the hundreds in the, say, late decade or early 2030s.
Interesting.
Yeah, Disney's. I guess it's fairly valued. I mean, it's not like overly on discount. So unless it drops down to like the 80s, it's not like a value play, nor is it a growth play. So it's like a sector perform. Does that
At
make
20
sense?
times free cash flow, it is just kind of hanging out there. That's getting closer to fair value.
Yeah.
Amit,
I mean-
what's your pick?
I told you, potentially it's stupid, but Disney buys DraftKings. It's never going to happen. But
Disney DraftKings. I thought you were joking. That's why I asked.
I am joking, but I don't know. Maybe it's idea. Okay, so it's almost 10:30. We have an hour 30 until the new year. I think let's ask a life question for everybody here and in the chat.
Oh boy.
I mean, there's probably multiple ways to do this, but like, I guess resolution for next year or biggest goal for next year or I don't know. How do you want to approach 2026? I guess is the question.
Yeah, that's fine. I'm going to clean up my diet is what I'm going to do.
Weren't y'all just talking about eating more steaks every week or something?
Yeah, that's
Like,
cleaning up my
literally.
diet, sir. That
Don't
builds
eat the cow, man. The cow is sacred.
Listen to me.
You're terrible.
Amit,
I mean, I'm gonna let your mom know you've been eating the
Let her
beef.
know, dude. Everyone gets so mad if they think I'm a bad Indian. I'm like, bro,
Amit,
it's
how
food.
legit was the place I took you to?
It was legit. It was legit. It was legit.
And plus, Amit, show them the picture of the perfect cook. Okay. Red meat builds testosterone, sir. We're good. Nothing
Right.
processed in there.
Everyone thought it was raw, but
It's not raw. It was delicious. Chris, look at this. Delicious.
Wait, Chris, do you eat steak or no?
I eat steak, yeah.
Okay,
But
so
I
what
don't
are you?
eat-
Why are you calling me the bad Indian? You're like,
I don't eat it every day. You
I don't
know,
eat
there's
it.
a
I
big
eat it, like,
difference between
once a
you,
month.
Harami. You're just like, yo, let me go eat this cow every day, yar. Let's go. I'm like, yo, I'll have it once in a while if I'm hanging out with my friends. And like, you know,
We're gonna go once a month. We're gonna go to different steakhouses once a month.
see, we gotta legit make it a once a month
Yeah.
because it's so easy for us to do it. You know?
Yeah, we'll do it like the first Monday of every month or something.
Yeah, it's perfect. That's perfect. Chris can do the accent. I can't do the accent. I don't
you
know.
can't do the accent. I'm surprised you can't
so
do the
bad at the accent, bro. I tried doing it once on stream and people made fun of me. They were like, "Yeah, don't do that again."
What about the nod? Can you do the nod?
Everyone can do the nod. Every Indian can do the nod. At least I hope so. Okay, so Steve cleaned up his diet. Chris, what's your goal for next year?
I don't know. I don't have any goals, man. I haven't. I've been doing everything right. I guess keep going on with the weight loss journey. Get down to my ideal weight. Like I really want to get down to the 160. Like I want to be like 155, 160. You know, and now maybe like start building up some muscle rather than just losing the weight.
I'm with you guys. It's health. That's like
Yeah.
the biggest thing next year.
Yeah, health is wealth, man. You can't get around that. You know what I would say? I want to spend more time with my dad. I'm gonna spend more time with my dad because you know, like when you get to that age, you start to see the deterioration of your parents, and so you're not going to get a lot of opportunities to just talk and hang out and stuff like that. And I haven't spoken to my dad. I mean, I speak to him pretty regularly, like, but it's over the phone. Like I want to actually hang out with him and be like, hey, let's talk. You know.
Your relationship as you get older definitely changes with your parents. It's very interesting.
Yeah.
At least with my dad, it changed a good bit.
Maddie, how about you?
Same health. You know, I've done well. I'd say the second half of 25, but with the holidays, I've definitely taken a step back, and I definitely want to hit January off running and continue on that journey. And then second, an optimistic goal will be to buy a house that I might retire into, at least in the short term, like next couple years in 2026. So
Maddie, buy some raw land, man, and build whatever house you want. You know?
I've thought about buying land, but it would be not necessarily to build a house. it'd be potentially to potentially build a business. So there's
Hey,
a lot
Tanner.
of different businesses.
Sorry, Tanner, get on with us, man. What are you doing in the
I
chat?
think he's having like a party at his house.
He's having a party at his house.
He's a party. Okay.
Thinks he's better than us.
Tanner, if you are not still having a party,
Tanner's probably bored at the party. He's like, let me see what these guys are talking about.
yeah, I think that he would not be able to do that.
Okay, so for all that's his health, Matt wants to buy a house. I also want to buy my first property next year, or at least put the down payment on it and get started with that process. My sister's getting really close to buying one.
That's awesome.
Yeah, like very, very close. And so I'm excited for her, but I think those are reasonable goals. I think a lot of people in the chat said the same thing. Health, continuing to grow. I mean, I don't know. It's another year, dude. We get another year on this planet. Like that concept in and of itself is crazy.
Did anyone else feel like 2025 went by quickly?
No, screw that. Liberation Day fucking put me in. Sorry if I curse. Liberation Day gave me heart palpitations, man.
I went back and rewatched the episode from Yumi and Amit on his
Yeah.
streams. I was looking for something. It was quite interesting.
Dude, let's play the clip. Let's play the clip. I'll pull it up.
If you can pull it up.
Let's pull it up because this was a hell. This was the guys. This was the Sunday S&P at 4,800. Chris, you were on this with me and Steve, and
Yeah, I'd love to find a baddie too. Finding a baddie, that would be great.
Stop looking for baddies, bro. They're gonna take half your shit. Look for goodies.
that's true, Matt. They're definitely gonna take half your shit, bro.
Or at least get a prenup before you get it with the baddies.
I think that's probably why I don't end up in a relationship, because I let them all know that there's going to be a prenup.
Trying to find the exact moment of this. Let me see if I can pull it up.
Well, hopefully everybody is ready for a good 2026 because I got a good feeling about it. I have a very good feeling about the S&P next year.
Please don't do that, man.
I do. I think we're going to have a 10 to 15% drawdown. I think we're going to get a lot of leverage flushed out, and I think there's going to be a hard period. Ultimately, I think we're going to have a good year, though.
Y'all remember 2021? How many of these companies were coming out? Like, and
oh my god,
and how crazy! Like, okay, check this out, Steve. Remember there's a company Fastly?
Sounds familiar, yeah.
Dude, $100 a share. Now it's trading for $7-8.
About Peloton.
Peloton was another one. Teladoc was like all the Kathy Wood plays. Teladoc at one point was $293 a share. Now it's $7. Insane, dude. Insane. What was another one of those, like, in the chat? What are some of the other ones that were like super not meme, but super like thematic stocks in 2020? If they're still around.
Well, I mean, think about it. Zoom went to what? Like a couple hundred a share?
Let me see. Zoom. Zoom was almost at, share my screen. At peak,
like 500, right?
$560 a share. Zoom.
How about this? Zoom gets acquired by Microsoft or another company to build out their freaking phone system.
I still use Zoom, believe it or not. I don't know, like that's like one of the hangovers that I still use for work and stuff.
We use Teams. I love Teams.
Yeah. Another one, DocuSign. DocuSign was at $300 a share. Now it's at around 70. That's still one of the ones.
Five Below was another one I think that mooned.
Five Below. Let's see.
QuantumScape.
All right, so let me play this. I mean, this was basically
Five Below has been mooning.
yeah.
You found it, Amit?
It's like a minute, but it's basically Steve saying that he's not doing anything.
Yeah.
He's gonna let this play out.
The floor on Friday, the reaction on the S&P was worse than 9/11 and the dot-com crash. What's your reaction to that, and how are you navigating this right now?
So I'm not doing anything. I have a few things to say about this. September 11th, .com and the global financial crisis were so much worse than what is happening right now. And when you think about the global financial crisis, you also had the Madoff event rolled into that.
Yep.
There were so many things going on. We are so far away from that.
Look at these prices on Webull. Palantir 74, Hood 34. Like that shit was crazy. Looking back, if you bought any of those names.
One of the things that I was really thinking about in the past hour is the amount of margin out there. You look at levered ETFs like TQQQ and all these other things. Those are going to get absolutely destroyed. And when you have people on margin and they start getting margin calls, they're going to start selling whatever they need to sell to keep their accounts afloat. So I think that this is a sell-off, not from retirement accounts, not from long-term investors per se. They're getting obviously impacted by it. But I think there's a lot of margin out there that we really shouldn't have. I think a lot of people are going on margin because the market's been so easy to navigate the past 2 years, and they're getting stuck right now, and they're needing to sell good assets to get them out of the hole. The problem I have with the market at this point is there are companies that are really not impacted that are getting hit, and there are companies that are impacted that are not getting hit. And it's just not making a lot of sense. And you know that I do not like to get political ever in this, but regardless of who you voted for, regardless of what you think of the president, I have to believe that he does not want to be looked at as the person who tanked a roaring economy. And we're 3 days into this. He can't say everything he wants to say on camera.
I mean, it literally didn't last more than 3 days. And then Trump said, buy the dip. Sorry, I was kidding. And boom, bull market 2025.
I think AI saved him. I don't think it's just him. I think AI really saved the day. Because after that, it was nothing but AI this, AI that, AI this, and the spending from the hyperscalers was just on another level. They all came out, yeah, we're gonna, and they would casually drop like crazy amounts of how much they were spend. They'd be like, yeah, we'll spend probably $100 billion, and everyone would be like, what? $100 billion? Zuck was like, yeah, we're probably gonna spend even more next year. And I think that's what really got everyone like, wait a second, like there's actually a ton of interest in this. So I don't necessarily think it's just Trump flipped on his taxes. I mean, tariffs. I think it was also Jensen and the tech bros kind of saved the day.
Agreed. I agree.
They also saved the
way,
economy too.
We have a little breaking piece of news right here. Trump has signed an order delaying tariff increases on furniture, kitchen cabinets, and vanities for 12 months.
Housing, bro.
Yeah.
He's trying to control housing.
Go get those home improvements done when rates come down.
Got to get
I
those
just-
houses, bro.
I just looked. I bought a lot of Rocket Lab in April.
Did you?
End of March. Yeah.
Good role
It
model.
was below 20. It was below $20 a share.
Okay, put in the
It
chat.
spiked
What
up.
was your what was the stock you bought the most during the tariff dip? Like it'd only be one stock that you bought the most during April to call it July.
Oh, I know
Carnival
what
Cruise
mine is.
Lines. Carnival, baby. I was like, I don't know what tariffs have to do with people going on ships and traveling. So I loaded the boat on more Carnival.
Amit, you know what mine is.
I think you and me have the same one.
We definitely have the same one.
Nvidia.
Yeah.
Well, I just like I was looking through my history the other day, just buy. Like I even tweeted, I was like, I'm going down with the ship. I'm like, all right, what, dude, 110, 105, whatever. Like we're doing it. And then Matt was Rock Lab. All right, so cruise lines, Rock Lab. A lot of the chat I see. Spencer says TQQQ. Zocolt says Google. I see some Teslas. I see some hoods. I didn't really buy a hood in the 34 dip. I got it like 50, 60, 70. That was when I really started buying more. But Nvidia in the low hundreds. Broadcom, SoFi's.
About a
Tesla.
little Amazon, but not a lot.
I did not buy Amazon during that. That was like 160. That was a decent dip.
Check Google. Let me check.
AMD. I see a lot of AMDs. Dude, but that was
some
the year.
Google in March, but not April. A little bit in April, but not a lot.
That was the year. If you did not buy something during that time, you had to really work hard to find something undervalued 5 months later. That was it. That was like you had to. It's so crazy how the whole year can be defined by a couple days. Literally a couple days to really make.
But that's exactly why time in the market always prevails over timing the market, because people who time the market traditionally miss those 1 or 2 very big days of the year. And it always happens that way where you just have, I forget the stat. I feel like the stat is like 6 to 8 days to find the market out of the year. That if you weren't in those, you basically missed out on 60 to 80% of the gains.
I think it's crazy when there's like this short-term bad news that comes out and people just irrationally sell things off. Like this summer, I was looking at United Healthcare, dude. It was like the price targets that were coming out were outrageous. Some people were like, it would be like 230, 240, and then all of a sudden people would come out and be like, no, I think it's still going to go all the way down to like 110. And I'm like, 110? Like, where the hell are you seeing that BS? And when the market reversed, everyone, like all these analysts, they all changed their tune all of a sudden. It was the craziest thing to see. Like for a good solid, I think it was like 3 weeks, I was just like, dude, this is dumb. And I loaded the boat on UNH, and it worked out well for me for this year. But let me tell you, when the market starts irrationally selling things off, if they're a really good company with like strong value propositions to the upside, you just gotta like add and relax, you know.
That's why I agree with that wholly, Chris.
Yeah. What is Amit doing? Is he drunk?
Him and I just took a sip. He is going crazy. And I'm sitting here like nothing happened.
I don't need a chaser. I don't need a chaser though. At least I don't need a chaser.
But I tell that to people a lot, Chris, because I see a lot of people, they'll be like, I think this is a 2 or 3x or sometimes a 5 or 10x company. And they'll be like, but I'm waiting for it to go from $20 to 16. I'm like, it's at $20 today. You can guarantee you getting in, and you still think it's going to go up 4 or 5x. Maybe you're able to get another 20% shares, but maybe you can't guarantee that. You know, maybe it doesn't go to 16 and you never get that opportunity. And I see you said that so many times with Rocket Lab, with so many other companies like Google as well. People like, I think it's going to go down. So, you know, I people need to watch out for themselves, but at the same time, I think sometimes people think they're too smart, you know, and sometimes you have to give and take the opportunities that the market gives you, and you can't perfectly time everything. Sometimes it's better to be in the stock than just let it go.
Yeah.
And that's why I traditionally scale my way in, because I'm not smart enough to know what it is going to do week to week or month to month. Sometimes you go in and it'll start moving away from you, and you just have to think, why are you investing in that company? And if you're truly a long-term investor, if you loved it at 20, you're going to love it even more at 16, because you can get a couple more shares for the same amount.
Love that. Yeah, no, and the same, like VG is a prime example of this. It's like, I didn't think it was going to go below $8. And so I bought some at 8, and now it went down below $6 or whatever it was. And I was like, I'll find the money. And what do? I found the money. I was able to figure out a way. So it's like, if you do get that opportunity, if it's really that good, find your way to wish that money into existence. I know that's easier said than done, but if you really think it's that good of an opportunity, and the market does actually give you that at Rocket Lab at 16 or whatever it is, then, you know, look at some of your other positions, take that opportunity to be like, do I actually want this much money in, I don't know, SPY or something like that? And I always look at that. I've always used, and Chris or Steve and I talked about this on Monday. It's like, while I use SPY as like an oh shit fund, I also use it as, hey, if I actually need some liquid capital and I think there's a really good opportunity that I want to make an outsized opportunity in, I have a shit ton of money in the S&P 500 that I can sell and take that and move it over. And I don't, and otherwise I almost used to use it as a savings account. Like I bought another share of SPY today just because it was the 31st of the month, and it's just automatic. And what happens? Maybe next month something shows up, tariffs or God knows what. I can use that $607 and move it over into Meta or move it into VG or Next or Rocket Lab if it goes to $20. Like it gives you that opportunity, and as long as you continue to put that money aside, there's that.
Steve, I mentioned you at the end of the latest Substack, and I said I will be officially starting to buy the S&P next year as a hedge against myself because of what my friend Steve said. So I agree. It's a great idea.
Buy Verizon, bro. Low beta, 7% yield. That's where you want to park your dough. It's super liquid. It's a qualified dividend. If anything happens, you could sell it right into the open market and then buy stuff that's high beta. You like the thing is, that's the other thing too. When you're in, like, Verizon didn't dip nearly as much as everything else did. So you know what I mean? And the other income that you get from that return, you could probably sell some covered calls if you really want to juice up your returns to be like 10, 11%. Well, I think right now that's one of the things that investors should do. Just find those value plays that if we do get a market dip, they're not going to dip nearly as much. In which case it gives you that firepower to go hard in the other names that have been oversold,
So what I'm about to say is only for Amit. Nobody take this seriously other than Amit. Chris, the reason why I said it to Amit is because he does not currently own the S&P, whereas you have a good amount in the Contra fund. Matt and I both in the S&P.
Yeah.
My conversation with Amit was more, look, this is a hedge against yourself because you are predominantly in high beta names that in a correction, you will see a very large drawdown. Whereas if part of it was in the S&P, you won't get hurt as much. So it's more about just getting him set up to not feel as bad of a sting, and also diversification a little bit.
Yeah, obviously, I think the past 3 years, the S&P could easily be beat, but we saw in the last couple months, like some people ended up not beating the S&P because of the last couple months of volatility. So if that continues,
BMNR,
dude, BMNR.
Oh,
so
I'm going to my rant right now. These motherfuckers.
Right, go for it.
Okay, these motherfuckers. Stop. And Tom Lee, I'm going to make a video about this. Okay. Tell your team to tell the advisor firm if they want a text message, that's fine. That doesn't cost any money. Don't start sending it. Don't go to a mailing house and start sending out these flyers to everybody. That costs money, additional money than hiring Alliance.
It's also cringe. It's just cringe.
Yeah, but one, it is cringe because no other company is doing that. But two, that's money we could be buying Ethereum with, baby.
That's true.
I don't care if it's just 1 or 2 Ethereum, which it's got to be more because I know what those campaigns cost. Now, you're getting a big discount going to a big bulk mail house and having them do everything and giving them the list of all the addresses. But still, we could be getting more Ethereum.
Bro, it's just the worst part is, like, I'm very close with one of Tom Lee's press ladies, and like she's like constantly updating me about BMNR. And I'm like, I don't have the like heart to tell her, like, lady, everyone hates this stock right now. Everybody. Like, I don't know what to tell you. Like, this is not something that you can be excited about. Everyone's bag holding. I mean, the majority of people are fucking bag holding this thing. So
it's a real big shame because I think the second half of 2026, it'll be a great opportunity to buy it. And I really hope that people are keeping it in the back of their mind and not losing sight of it, because I'm very optimistic in terms of the fact, this is going to sound weird because I'm optimistic that crypto winter is coming, which is a positive on a negative, right? But I think it's going to be a good opportunity to pick it up towards the second half of next year. And I think the company is going to do extremely well in the long term with it. But I will gladly eat a hat if that's not the case. But I always thought it was long in the tooth. And that's why I never jumped in.
No, you're right, Matt. It's just the timing was so bad.
If Matt is right, which in all seriousness, I kind of hope he is, because One, I think probably too many people bought on leverage. Two, I would love to double my position at a much lower cost than where it is here.
Yeah.
Would love to. I will listen if BMNR goes under 20, because I would think that Matt's thinking it's going to go 15 or 20 at this point. If it does, I'll double my position.
To me, I
I'm-
think it's going to be
I'm for long on
generating.
Friday.
It's going to be if they stake all of it, they're going to be making $250 million a year just from staking, and it's not a $50 billion company. I mean, we're talking about a company that's 10 to 15 billion right now, and if it does drop to say $15 to $20 a share, I mean, you're talking about a company that's sub 10 billion. That's a lot of money, you know, to be generating on an annual basis. And I don't know. I'm cautiously optimistic that when 2028, 2029 comes around, that the company will do really well.
I think the strategy, and this is probably what I'm going to do, and I already said this morning, but I think I'm going to use the in the money calls to hedge BMNR at like a 40 break even. My average is 42, and I'm going to use that premium that I get, put it in a separate hood account, and wait for that opportunity that Matt is talking about. Because I do think Matt is right. If we get a crypto winter, which I mean, even freaking Tom's internal crypto team thinks ETH is going to 1800, which would I think be the definition of crypto winter at that point, maybe a little bit below that. Yeah, BMNR is gonna be $15.
Where's
this
he
is
right now?
this is the problem though, is like, well, I know that Tom goes on CNBC and talks big game in the short term, but like I believe at heart he's an optimist and he's always a long-term minded individual. And so I think once again it's the short-sightedness of the individual investor that is trying to get rich quick that got screwed on this opportunity, when I think in the long term it'll do extremely well. I mean, look how well MicroStrategy has done, regardless of whether or not people look at it and say, look how horribly it's done over the past 6 months. It's still up massively compared to where it was. And I think if they utilize a comparable sort of strategy, and even potentially better one, considering you can actually stake Ethereum, I think in 2029, this will be a banger stock potentially.
But I agree with all that. The problem is he's supposed to be a massive macro talented mind, and he got the macro completely wrong on crypto, which is the sad. And again, I was talking about this morning. His audience is retail. Like institutions aren't buying this shit. Kathy's buying, but Kathy buys whatever. So like the real people who are buying it are me and you. And when we hold the bag, it's a way bigger story than if some bank holds the bag. And I think that's what's kind of fucked up his brand in the short term.
Well,
and I also,
the
last thing, I also think he didn't need to do it.
He
Like
did.
you can believe ETH is a super cycle, but why? Like he had to really believe ETH was going to 10,000 soon for him to start this in July. And then Dan started this Orbs nonsense as well, which I've explicitly been like, I don't get this.
Orbs, what's that? I have no idea what you're talking about.
It's a digital asset treasury on WorldCoin, and that stock's in the gutter.
Oh, that one? I didn't even heard about or thought about it.
Dan doesn't know anything about crypto, bro. Like all of it felt so, and then Tom invested in that. Like as soon as that was happening, dude, I realized this is weird. This is not the Tom Lee that I knew that is consistent about the macro and this and that. I can disagree with him on small caps over the past couple of years, but whatever. That's just a stock. But this is some totally left field shit because he thinks this thing's going to 60,000 and it just didn't work. Now maybe it works in 5 years, but how much bag holding in the meantime does that create?
Yeah.
By the way, I'm still long on BMNR. I don't have a position right now, but that's because I'm just going to get back in after my tax loss harvest 30 days are over. Right. So I'm still confident that I think Ethereum, I'm still long on the Ethereum like stable coin ecosystem. So I'm still going to be in it. I think one of the challenges with BMNR that, like when it came to me making a mistake on BMNR, I would say that the optionality and all the legislation and everything was definitely a big upside. And this is something that I am learning, especially because crypto is a learning experience, is that there's going to be rug pulls that are out of the control of the ecosystem, right? So that whole thing that happened on October 7th with Trump just coming out and saying we're going to put 100% tariffs on China, and that sort of having all of these secondary impacts where this thing was sold off, and then all of a sudden I didn't even know that there were that many leveraged positions in Ethereum to the point where this thing got absolutely murdered, And then all of a sudden sentiment changed and sentiment just never got back to what it was before. I mean, for God's sakes, you got Larry Fink coming out and saying, hey, I think stable coins are the future. That was my thesis. Like every single big person who outside of to hell with Tom Lee. Like, let's not look at Tom Lee. Let's look at Larry Fink, head of BlackRock, coming out and saying, look, we're going to be utilizing stablecoin. JP Morgan, who was the biggest anti-crypto person in Wall Street, flipped and said, you know what, JP Morgan's going to actually use the technology. So when you see the titans of Wall Street getting long on something, you kind of want to be like, okay, yeah, maybe there's actually a story here that is beyond just the headlines. And I think that's what really drew me in. And it's just one of those things where the timing did not work out in my favor. Now, here's the thing. I had a bunch of gains that I needed to offset for this year. So I sold out of BMNR and I was like, all right, I'll just tax loss harvest this thing and wait until I can get back in. And in my opinion, there's no quick flip on the sentiment. So I don't think that I'll be like, oh my God, I missed out on gains all of a sudden. Like, yeah, it's fine. Miami just beat Ohio State. Get out of here.
Is Ohio State good?
Yeah, they're like number one, dude.
Oh, but Miami's 11-2. It's not like they're bad. Oh, but they are the 10th.
It's Miami versus Ohio State, man. Oh, dude, hold on.
A lot of people lost money on Ohio State tonight, probably. We have 1 hour in the East Coast. Maddie has 2 hours. Chris, are you behind it? No, Chris, you're on the East Coast time. Yes, Chris has an hour.
Dude,
I just have an hour. I'm in East Coast.
Oh yeah, you're East Coast. Yeah. Oh, so we're on the East Coast. Okay.
Gonna be rich like Chris. That Chris money.
It's the wife's money, bro. I'm just temporarily holding it on to her for her.
Dude, someone actually thought I won the freaking Porsche, and they tweeted it.
Yeah,
I
me.
wanted that Porsche.
I didn't think that you would, do that to us.
Dude, I had to. Like,
I had to.
I had to do it. How could you not do
it? You're the man, dude.
Oh my gosh.
I cannot believe you did that to us.
So, Amit, what other stocks are you going to be adding to, man? You got a lot of great opportunities and great positions. I'm just curious which ones that you're actively wanting to add to.
Zeta is one of them, but you know what I want to do next year? I want to really start focusing on SMID caps. So 5 to 15 billion. Because I'm thinking if you're looking for growth, it's harder to get it out of the $1 trillion companies. Those help you sleep at night. But if you can find a quality $10, $15 billion company, getting them to 30 billion is not crazy in 3-4 years, if not sooner than that, if they're really growing fast. So one real strategy I want to deploy next year is just heavier research. And I think the LLMs can help with more advanced research and filtering. But yeah, I want to try to find companies under 10 billion and see is there potential? Because I'm sure there's plenty of good ones. I mean, there was a lot of small caps this year that rocketed, absolutely took over. But it's hard to find them when you're so focused on NVIDIA. Now, granted, we had a whole market dip, so everyone focused on the things they already knew. But next year, if we don't necessarily get that, I think there's other names to look out for.
And you stated, I just want to make sure I'm not on mute. You stated that you also want to take a bigger position in the SPY. Is that something that where it's every check that you get, you're going to put 5-10%, or is it something you're going to put 50%? I'm curious. I mean, if you feel comfortable stating, of course. I mean, I know.
I feel like I can buy about 3 shares of SPY a month. It's $2,000 a month, theoretically. I think I can do that. And I would put it in a separate hood account. I don't want to look at it because if I look at it, I know I'm going to be eager to just get rid of it and be like, why the fuck do I have this shit?
Are you going to put it in a traditional IRA? Well, that's $2,000. You'll be done quick.
No, Robinhood lets you have multiple brokerage accounts. That's what I mean. So
Matt, don't forget, Amit can open up a SEP.
I already have a SEP.
Perfect.
But my entire SEP is graph. Because I'm dude, it's $5. I'm in 5 years, if that's $10, that's a double. I think that'll outperform the S&P over 5 years. I don't know if the S&P doubles over 5 years. I mean, maybe it does, but like, obviously it's safer. But I really do believe in Grab. So my entire SEP is gonna be like 65 grand if I contribute the full amount, which I should, into Grab.
Are any of y'all looking at Alibaba by any chance?
Alibaba's on my list of stuff that I sold this year that I'm considering getting back into.
China's interesting. They're actually stimulating.
Yeah.
Yeah.
China's interesting.
And because they want to kind of win the AI war, they're gonna need to like lay off the tech companies over there.
Bob
And
is
so-
their number one cloud infrastructure play.
Yep.
Say that again? Sorry.
Bob is their number one cloud infrastructure play.
Yeah. Well, Tencent's there too, but you're right. Baba's the one that you want to really.
Baba.
Doug likes Baidu,
Doug
Say
does
again?
like
which is like Chinese Google, I think.
Yeah.
It's actually up this year, right? Baidu is it's like 40%. It's 57%.
Ooh, your boy got that Meta dividend.
Yeah, I just got the VG dividend too.
Yeah, VG dividend day.
Wait, Steve or Chris, did you sell calls against your Meta long calls yet or no?
Yeah, I did.
Okay, so
900.
you collected a good premium already.
Yeah, I
900.
took a really good
Choice.
premium. I took the premium and rolled it right into naked NVIDIA calls.
Ah.
900 for June or for January?
2028 January.
Okay, so you're 2 years out. Okay, I still think that's a good call. I like that call. I think that'll be good.
Yeah, so what I did is when Meta was at its bottom, I ended up buying a bunch of their naked calls. And then when this thing rode up and RSI got up there, I was like, all right, time to sell against it, take the capital and put it into NVIDIA, which was undervalued at the time. And
So
NVIDIA,
your 2026 has to be defined by NVIDIA and Meta going higher. Like that's what really makes or breaks your year, basically.
And it has-
2026.
Because you
Yeah.
got naked NVIDIA
All right.
calls and then you got Meta spreads. Like they both
Yeah, no, those are, yeah. But the thing is, I'll be honest, I'm probably going to get out of the NVIDIA spreads. The NVIDIA spreads that I have are for 2027, not 2028.
What, are the strikes crazy or
No. I'll tell you, the strikes are
I would put them to 2028 just because you never know what happens.
maybe. So I put 2027 January $200 calls, and then I sold against that with 250 calls. So
Look, it should get to 250 next year, but if it doesn't,
well,
Ooh, I have
I'll
a
probably
question
get
for
out
the
of
three
it.
of you.
I'll probably get out of it early in, like I said, my goal is to get out of it by the summertime, and I'll take whatever the gains are at the time. The only reason why I say that is because as you get closer to the expiration, something can happen that's not related to NVIDIA that can cause the market to dip. And if the market ends up dipping, your calls can be really underwater and then you're kind of stuck. So sometimes you just like time is your best friend and it's also your worst enemy. You know, so you have to
So-
just be smart.
Last night, Tanner and I were having a discussion, and we made a bet. If NVIDIA closes above or below 250 next year. And I said that I don't think NVIDIA is going to close past 250. He thinks it's going to go to 300 plus.
yeah, Tanner.
So he took the over on 250. How does each of you feel about NVIDIA 250 next year?
By January
At-
2027?
2026.
I don't see it happening.
And I'll give you my reason why I said 250 and under.
Wait,
Matt,
what market cap is 300? What market cap is that? I'll just do the math because I have it put on.
I mean, what is that, like 6.5,
7.2 trillion.
7.2?
I don't know, dude. That's
Matt, you have any thoughts on it?
What, 250?
250? No, so 250 is where the bet is. I said under 250 for next year,
Closing out or just touch it?
closing out.
I think that shit might. I don't want to say shit shouldn't hit the fan. That makes it seem more dire. I think there's going to be some faltering potentially. I'm still cautiously confident that AI trade might pull back a little bit in the second half of 26. Not in a horrible way. I'm not saying it's going to zero. I just think that the growth slowdown might be impacted due to the fact that capex is starting to get tighter.
Also, people saying like you guys are being bearish now on Nvidia when you just said Jensen's the best CEO. It is not bearish to say the company's not going to add.
Guys,
Like, what are we? How can we?
250 next year is not bearish. That's a 23 or 24% upside from where we are.
Saying we're
You're
not
gonna
going to
make me go off. You guys can make me go off.
Chat needs to get punched on the
it
mouth.
really is weird when people say you're bearish if you don't see it going up $4 trillion in market. Like, no.
We need the biggest flush out of all time when I hear comments like that.
And I can't wait because people are
Yeah,
going to be screaming.
can you share the screen real quick? So this way, see, the thing is, when you have this happening where your revenue is slowing down like this, it's not Jensen's fault that Nvidia's revenue is slowing down. It's just the sheer amount of money that these guys are generating. They're literally generating $200 billion. Next year, they're going to generate $320 billion in revenue. Do you know that's $120 billion of additional revenue that they're going to be generating? Do you know how hard it is to replicate that year over year, like continuously? It's increasingly difficult. So from a valuation perspective, when things are slowing down like this, you have to kind of gradually take your EBITDA multiples down. I'm not saying this thing's going to crash, but to say that, hey, I think this thing is going to just absolutely skyrocket to 300. Dude, even the share buybacks right now that they're doing at $100 billion a year, dude, they have 24 billion shares outstanding. Let me repeat that. 24 billion shares outstanding. If they were to take $100 billion and just buy back everything that they have at the current price, do you know how much their thing would go down by? Maybe 1 billion shares. They would still have 23 billion shares outstanding.
Yeah.
So this is what I said last night about the Tanner, because we were going back and forth on this for a good 10, 15 minutes. And I said to him, NVIDIA has become one of my largest individual holdings. And when I say individual, I mean outside of ETFs. It is a top 5 holding of mine. I am bullish on them. I think that the valuation where it is today makes no sense. And I think that it should trade closer to 27 to 30 times forward instead of where it does. The market is obviously not giving it the multiple today after coming off a Q3 63% year over year revenue increase. With revenue going down on a growth multiple, as Chris showed, I don't think that the market is going to give it the type of multiple that he thinks it's going to get. And I really think that this is a company that is going to trade not like AMD and not like Broadcom, even though I think it should get a better multiple. If it can't do it now off of that number, it's going to be hard pressed to get past 250 next year, even with an expected 160 billion in net income. I'm not seeing it. And that's why I said 250. And 250 is still pretty damn bullish when you think that that's basically 23 to 25% year over year from where we are today on a share price. Like, you can't ask for more than that.
Dude, I think like if we even see 230, 240, and we talked about this before, but like, I don't know, dude. I feel like I start trimming a little bit. Like,
I'm getting out of NVIDIA at some point. This is not something I'm holding for 10 years by any means. I've been in it for, I think, 1.5 years or 2 years now. I think that at the end of the day, I can't predict what CapEx cycles are going to do. I certainly don't have a crystal ball, but I keep extending where I think that inflection point of CapEx expansion goes into maintenance mode. And I want to be out of NVIDIA before that switch flips. And I don't care if I miss 10%, 15% upside, because when that switch flips, I think NVIDIA is going to come down 30%.
You also have to be realistic. Like, when a company gets to that size, how much more upside is there easily? It's probably upside, but the easy money in that is done. Just like the easy money in Google is probably done. Google will still get to 400. That's not easy from 300. Whereas at 140 to 300, it was relatively simple.
It's, to me, I look at it from a multiples perspective, right? If you got if you've got crazy levels of growth, then you deserve higher multiples. And if you are slowing down, your multiples are going to compress. It's not the hardest thing in the world to see. Now, if they have a reacceleration, that's another thing. But I think,
100%.
and I think that's where things get lost in the sauce sometimes. So I don't see them reaccelerating to 100% because there's just not enough money on the planet left at this point. Like what like how much more can Google, Amazon, Microsoft, all of these guys keep spending year over year on a year over year basis? Not necessarily how much can they spend, but how much can they do? They're running on taking on debt to finance this stuff.
Yeah.
Which I think they can
Then-
do for a couple of years, but
Right. And you remember, you're also hitting against other walls as well, which is the power energy walls, right? Where you need energy. So even if these guys were to somehow sell all these GPUs, there's no way to put them in a data center and power these things. So I think the rate of growth in NVIDIA naturally has to decelerate. And that deceleration in growth is what, just like I said, it just leads me to believe that the valuation shouldn't be like 300. I would say at the max, bear case, 225, 200, bull, like base case, 250, 275, and then bull case would be like 275, 300. Like,
Also, we have to remember, Tanner has said this many times. He has sold NVIDIA on the way up since 2018. So,
Yeah.
like, trimming positions is normal. Some people like to do it, some people don't. But he is trimmed, and it's still 50% of his portfolio.
yeah, it's a large percentage.
yeah.
So just
I
from a
ca-
portfolio management perspective, it's not.
You know what's crazy is what his average share price is.
I actually don't know his average.
So he said it publicly, so I have no problem saying it. And the crazy part is he's actually bought it recently, like in
Yeah.
the past year. His average share price is like 20.
That's awesome.
Wow.
I mean, you got to remember, he bought it back in 2016 or 2017.
That's awesome.
See, but that's the other reason he can be so bullish. Is because his margin of safety is so high, whereas my average is 120. Like my margin of safety, if we get a nasty credit, is not that great. It's good, but it's not great.
Because how many billion shares
chat.
have you sold?
Good
For us?
for all of you. 16, 20, 26, 19.
Oh, we have tons of NVIDIA shareholders, OGs.
I love that. Good for all of you guys. Congratulations. That's amazing.
Evan doesn't count. Evan has one share. Okay. Ignore Evan. But it's a good average. 750.
Can you guys help me with something? So
Yes.
I've always been a big proponent of the S&P 500. I'm just doing some math and adding up like my 401k and all that stuff. So I found out that my position in this SPY is a little bit bigger than I was expecting, but I'm not done, right? So I've done this with all my other positions, and I think this would be a good exercise for everybody. So I always like to think, 5-10 years down the road, what do I think a company will be worth so that I can back calculate how many shares I need to get the position to a size level that I want it to be. And so my question to you guys is, what do we think SPY will be in 2035 timeframe? So that way I could try to back calculate approximately how much of a position I want to have in SPY. So let's just say I want 100 shares in SPY because, let me do something simpler. Let's just say by 2030, I think SPY is going to be $1,000 a share, and I want $1 million by 2030. Then I would want to get 1,000 shares in SPY, kind of like my idea for Amazon, right? I think it's very comparable. So, but if I wanted $2 million in SPY, I would need to get 2,000 shares, right? If I needed 3,000, I would need 3,000. If I think by 2030, it's going to $1,000 a share. So I guess my question to you guys is, assuming no splits or anything like that, where do you see SPY or the S&P 500 by 2035? Do you think it's realistically
You're going to
get
hate
to-
my answer. I'm going to let them go first because you guys are going to hate my answer.
Honestly, I have no idea. 2035. It's got to be. I mean, I've heard 15,000 as like targets many times.
That's
But-
my thought is 15, and that's only like an 8% compounded annual growth rate, I think.
Yeah, but see, here's my question to you then. Wouldn't it be better just to put it into some bonds that are yielding very similar returns without nearly the amount of risk in volatility downward, especially with the valuations being so elevated right now. Because I mean, look at your ERPs, right? Your equity risk premiums. Your equity risk premiums are garbage right now.
Do you have bonds that are going to yield me 8%, Mr. Patel?
Yeah, plenty.
Well, what bonds? It's going to be corporate debt, right? Like what
Corporate
bonds?
debt,
Yes,
yeah,
corporate
corporate debt.
There's risk associated with that too. It's not like
You also have some great dividend players like Verizon who are doing almost 7% right now with a growth rate of about 2% every year. So
Yeah, but hold on, Chris. In your retirement account, you're in the Contra fund, correct?
yeah.
You have Verizon in there too, or just Contra?
No, I just have Contra. But
Okay,
I am
because-
thinking about moving some of the Contra out and just putting it into some high low beta names, because Contra fund has one flaw in it, in that it does have a lot of concentration in tech, right? So I'll show you guys, like,
All right,
it's
so
out.
before you show us, bring it up. I'll bring it up on screen in a sec. Matt, you guys are going to hate the answer. The SPY in 2035 will be $2,045.76.
24,000.
No, 2,000.
Oh, no, I know.
SPY, the ETF.
But yeah, but that's basically SPX at 24 grand.
So over the past decade, SPY has appreciated by 255.31%. I'm saying that we replicate that over the next decade. I would even say I think we get a little bit more juice out of the SPY, because over the next decade, I don't think we can fathom what AI and robotics is going to do to the economy. And I think these companies are going to be so much more profitable than they are now, that it is not crazy to think we will replicate what we did the last decade at a very minimum. This is a much different market than it was in the 70s and 80s.
Mm-hmm.
I think it's not crazy if your robotics thesis plays out.
AI and robotics, that's what it's about. I mean, and guys, I don't think we're 10xing in the next decade, but SPY could replicate what it's done.
S&P 100% return next year, 2026, or else everyone in the chat thinks we're bearish.
Right.
But no, I mean, it's a
Matt,
serious
I can
question,
tell
right?
you-
Because I want to back into, I had a goal of about 1,000 shares. I'll just be blunt, of the S&P, because I, was kind of like, okay, eventually it's going to get to $1,000 a share for SPY, or about 10,000, 11,000, on the SPX. Now I'm sitting here like, okay, well, I'm getting closer and closer to that. I'm not done. So where am I headed? Am I headed to 2,000, 3,000 shares? Like when, Matty needs Lambos. So what am I going to do?
This is also a much different market than it was in 2000. If we have a down year, as we did in 21, I'm not so sure that we get 3 or 4 down years in a row. At least right now, at least for the next 3 years. And I can't predict past 2029 with the short-term thesis, because I don't know what the political landscape is going to be and whatnot. But when I read through the Fed's economic projections through 2028, it is very, very low percentage probability that we go into a recession. And if we are having GDP growth, that means you're having big revenue growth, and you're getting earnings expansion with rates coming down and with inflation tapering off and getting back to a neutral rate. So in the short term, things look good. And then you add in the potential for AI and robotics completely changing the landscape of business. Even if we get a rotation out of a lot of companies into new companies, that's the greatest thing about the S&P 500, because we're still going to get exposure to those. So we could see a replication, if not more. I don't want to sound like a Super Bowl saying that we're going to over replicate, but I think we'll have a recession. I think we'll have a down year or two. But ultimately, I don't think seeing 255% is crazy, considering COVID happened and they turned the money printers on and got us out of it, and the market was up. You had Liberation Day. Think about what you had over the past decade, and we did pretty damn good. So It's hard for
Yeah.
me to be bearish on the market long term.
And I see a lot of people saying, Matt, don't do SPY, do VOO or IVV. And I hear you. And I love what you guys are thinking. You guys heads in the right spot. But the reason why I choose SPY, and once again, this is for me, not necessarily for everyone. The reason why I choose SPY over VOO or IVV is because you have a lot more strike prices. You have a
Yep.
lot more expiry dates. The volume on SPY is much better. So yes, while you are paying a higher expense ratio, the flexibility, the flexibility and the spread on SPY is much better than at the moment for VOO or IVV. And so while I respect you guys saying that because it has a lower expense ratio, I feel like I can more so make up that expense ratio and then some on the covered call side. So that's the reason why I choose SPY over VOO. If you don't do any covered calls and you're more so just focused on just, buying every month on VOO or IVV and not doing any covered calls or anything, then I completely agree with you. Once again, it always goes back to understanding where your portfolio is at and why. And so that's why I choose SPY. It's not to say that I'm right or wrong. It's right for me based off of my belief on the ability to write more covered calls and have that flexibility.
Chris, am I bringing this up?
Yeah.
By the way, you guys know I'm ringing the bell at New Year's is at 12.
I would expect nothing less.
Okay, just letting people know.
So this is the S&P 500 over the last, what is it, almost like 50 years now. Kind of crazy if you think about it. It's like 40, almost, roughly. SPY went from about $100 to now $6,800. Really nice run going forward. But there have been periods where when valuations have gotten too extended, you've had this flat line, right? And this flat line has been pretty egregious if you think about the SPY. So if you bought the SPY in the year 2000 in May, you broke even on, what is this? Right here around December 4th of 2012. That means you made zero returns, not $1. So the thing is, when you see the valuations on the markets get insane like this, that's when you have to be a little bit better. And I think right now what we're seeing is this giant index bubble where everyone's just like, oh yeah, let's just put our money into SPY. Let's just put our money into SPY. Every single person you talk to, they're like every financial advisor, every mom and pop investor now, they're all just saying, why am I going to put my money with hedge funds? Why am I going to put my money with PE funds? Why don't I just put money with SPY? Every single person is saying that. So when the entire crowd is moving into this one direction, you got to ask yourself, what the hell is going on here? And this is where I think things get set up for a really, really bad index investing led bubble. So if you look at this, the CAPE ratio for the S&P 500, at one point it got really overvalued. And then what happened? You had this giant wave of contraction and literally just stood there for a while. We're getting back to the levels where valuations have really started to extend. The last time it was this high was December of 2021. Do you know what happened to the SPY after November 2021? It went down and then started to recover higher, right? But what happened in the meantime? If you bought in 2021 at the top, you didn't recover your money all the way until 2024.
Yeah, but Chris, Matt's 30-something years old.
No, but that's the whole point, that people have to take into consideration where they are in their age group as well as their risk tolerance and everything else. Like, you can't just be like, oh yeah, I think let me just put my money into the SPY if you're 60 years old. Like, if you're 60 years old and you're in the equity market, purely in equities, especially even if you think you're safe in the index side, right now you can safely expect, based on the current PE ratio, maybe like a 2 to 3% yield return, like equity risk premium. Let me just put it up here.
But Chris, keep in mind, everybody piling into index funds is just more bullish for the top 500 companies, because every 2 weeks you have massive guaranteed inflows coming into those companies that makes them just more strong. I mean, a lot of people want to say that we're in an index bubble. There is a lot of capital in indexes, but those indexes hold the greatest companies in the market. And It would
Also,
be the same thing if they were just going to go buy Amazon instead of an index fund.
2021 didn't have AI. Like
And-
there's something that's actually increasing earnings and margins.
And you can't go back and look at the dot-com bubble because that was such a perfect black swan scenario and this is a much different market where profitability is night and day different. That's why I say you can't go back.
Chris, I agree with
the market then.
I agree with you, Chris. The S&P multiple is extended, but like there's just way more growth. 2021 we had zero growth. We had over inflation.
Unfortunately,
and here's the real thing. Where else are people going to put money? Because not many people are going to put
well,
it
no. So I think the challenge here is that in 2020 and 2021, there are big differences. 2020, there was a lot of unprofitable companies that were just bid up like there was no tomorrow, right? So it wasn't like a real like expansion in growth and everything else. So you just had a lot of money that was getting funneled into the market. 2021 was very similar in that we had all these SPACs coming out. Today, we're in a much different environment. The problem is you have a lot of concentration risk coming into some of these companies that are way beyond the valuation that they deserve to be from a business standpoint. AMD, Palantir, NVIDIA is actually making a lot of money, but once again, if NVIDIA's growth slows down, then the multiple re-rates down. What is it called? Tesla right now, Tesla's trading at a crazy high premium. The problem is, you're right, all these indexes, they just keep buying these companies, right? And there's no price discovery. So what happens is when price discovery eventually hits everyone in the face, it's going to hit them in the face at the same exact time. And then when things get oversold, they're going to get oversold at the same level, and it's going to be indiscriminate selling. That's what's going to happen to the other problem. So you guys are thinking, well, look, every time there's just going to be more money coming into the best companies. Well, guess what happens if the market starts reversing? Everyone sells off companies at that brisk pace as well. So
who's selling off? Who is selling off index funds? Who's selling off retirement accounts? Now, individual traders and individual investors may be.
Steve, what did we go down on literally during Liberation Day?
Chris, did people really sell index funds and retirement accounts on Liberation Day?
I'm telling you, when people start panicking, it's a whole different thing, man. We were down almost 20% on the SPY. Think about where we were.
There's no way 20% down in 3 days. That was algos. That was not Matt saying I'm selling.
Algos and people getting flushed out because they got called on margin.
Right, but that's the point. That's exactly what's going to happen again with this market if we don't take into consideration how the algos are performing right now. So the way that this thing happens is you've got all of these people piled into the SPY, right? All of a sudden now you've got a macro level event that comes down and people have to sell. So what happens? The index funds have to keep rebalancing lower and lower and lower, and they keep having to sell things off lower and lower and lower. And it causes a lot of great companies to get oversold and a lot of bad companies to get oversold too, but not at the same pace that they should be. So
look, I could see that thesis playing out. And I think buying puts on the SPY as the hedge is not crazy. I just don't know if you're going to see a massive index fund bubble pop, as you're saying. But
I'm not saying we'll see an index bubble pop, but I'm saying that the move down in SPY is going to be a lot more exaggerated than people think.
That could definitely happen. And the other thing is regarding SPY, those companies make up so many different types of funds. You look at target date funds, those are the de facto for anybody that opens up a retirement account until they change it. And early in your career, target date funds are 98 to 95% S&P. They don't really start sliding into bonds until you're a good 15 years into it. So
the other thing is, I think we've had so much liquidity being pumped into the system that people keep forgetting that the reason why we've had this giant wave of exceptional growth in the last 5 years is because, guys, there's just been so much damn money printing and deploying into the economy. You know, at some point, I think the money printer is done. Like we're not printing nearly as much money. We're not putting it back into the system because the government can't afford it without hitting insolvency.
Oh, not with all the fraud we got going on.
Yeah, definitely not. You know.
All right, we have 30 minutes. We have to do a bracket.
We have a game that we want to play.
Okay. We literally forgot about this.
So here are the rules. We have 4 of us. We can do it one of 2 ways. We each take a region or majority rules on each game?
Majority
So-
rules on each one.
All
Majority
right.
rules.
Yeah, that's what I was going to go with. So for everybody who loves college basketball, we did the 64 largest companies in the S&P 500 to see who we think is going to prevail in a stock bracket challenge for 2026.
Can you edit this, Steve? Are you allowed to? Or-
I have drawings so I can write what we end up picking and circle and all that stuff.
All right. The first couple rounds should be kind of easy. So let's start off with the East region.
And for everybody watching who didn't see the stream with Amit and myself, we have it ranked the same way that they would rank it in the seeding for the tournament, with the number 1 seed versus a 16 seed. And it gets really interesting with some of the 8 and 9s. So let's just whip through it. East region. I think we're all picking NVIDIA, right?
Yes. NVIDIA versus booking. NVIDIA.
In terms of total return or what?
Yeah.
Total,
Which one?
total return, yeah.
Does NVIDIA beat bookings.com for
Yeah, but like, what is the? How does this? What do you? I'm trying
which
to.
one do you think is better in 2026? That's it.
What's going to do better in 2026?
Oh,
That's
so
what
you want to get to the final four?
We want to get to the final four and then who our champion is. And I'm going to invest in, if I don't own it, I'm buying the champion.
Okay. Well, you guys have fun with this. I got to take a massive dump, so I'll talk to you later. See you
Later, Chris.
later.
Later.
He leaves for United Health. I mean, you would have thought he
Sure.
wanted to say United Health, right?
Okay, so we're all three on NVIDIA. UNH or Wells Fargo. Matt, what do you got?
I'm liquidating all my SPY because Chris told me to.
Once again, don't take us seriously, everyone.
I'm going Wells Fargo. What do you got, Matt?
Ooh.
We just got to get through these, so you got to just give your gut feeling.
Just got to give it. You can't take a long time. We got to get
I'm
through
going,
this before
I'm
midnight.
going United.
Steve, you're the decider. Vote.
I hate being the decider. I think United because I think the banks have run a lot.
Exxon Lamb Research. I'm going Lamb Research.
I'm going Lamb Research.
Yeah, I don't see a lot of benefit in oil in this current market.
All right. MasterCard Citigroup. Jesus Christ.
I'm going City.
I'm going Master.
I'm going Master.
All right. AMD Salesforce.
Oh, this is. I'm going AMD because I don't want someone to come find me tonight. So I'm going AMD. Steve, you got to pick Salesforce. We know you're going to pick Salesforce.
I want to see what Matt picks.
I want to see what you pick, Steve.
Yo, Matt, just take AMD. Then Steve doesn't have to be upset.
No, all right. There's so much growth for AMD. Like Salesforce is a catch-up play.
Yeah, dude. If you're picking NVIDIA, you got to pick AMD.
I'm going Salesforce.
Okay, Matt, it's up to you.
Choose an AMD, man. I
There we go.
think it still needs to catch up.
All right. I'm going Tesla on this.
I'm going Tesla.
All right.
I think robotics are going to show up next year.
I'm going Home
I'm
Depot.
going Home Depot.
Yeah, housing
I think
market.
Home
opens
Depot's been on a little bit of a downcline, hasn't it?
But if the
Then-
rates come down, we could see housing on a tear, which is good Home Depot.
That's what I'm
Yes.
thinking. That's why.
Right?
Yeah. So Home Depot has been down a little bit. It was at
Yeah.
422 and it's at 344. So that's why I'm going Home Depot. I'm with you guys on that.
All right. And then for the last one, Broadcom, Qualcomm.
This is so easy. It's Broadcom. Not even a question.
Yeah, like
Not
Broadcom.
even a question.
It's down a good bit, isn't it? We talked about it the other day.
Yeah.
I'm just
Has
doing
it retraced
freaking
up?
letters. There. Oh, fuck.
God damn it, Steve.
See, this is you would think Steve's drunk. What are these letters, dude? Oh my
Yeah,
god.
we're cooked, bro.
No, because these go into there, these go into there. And then it's the way it got formatted. Okay. It's the way it got formatted. I'm saying Alphabet over BlackRock.
Oh, 100% Alphabet.
This you could flip a coin on this one,
I'm going Cisco.
Maddie.
Whoa. Did you both choose Alphabet?
Yeah, we both chose Alphabet.
Okay, I would have chose BlackRock. Cisco, yeah.
Yeah, that's a hard one. I mean, are we not going to pick Palantir?
What is it? Yeah, it's Palantir. It's Palantir. Palantir versus Thermo. It's Palantir.
Visa Disney. I'm
Visa,
going
baby.
Visa.
100% Visa.
App Lovin'. I'm picking App Lovin'. I'm going underdog on this one.
Matt, what do you got?
I know nothing about AppLovin, so
I'll agree
I'll
with
choose-
Steve. Although, yeah, let's do App Lovin'. Let's do App Lovin'.
Lilly versus Pepsi.
Easy, Lily.
Maddie.
I feel like Lily's been too much of a tear. Let me see. Yeah, I'm going with Pepsi.
Ooh, God. Pepsi at 140 could be a rebound, but I think Lily's just got too much expected growth. I'm gonna go Lily. Micron Merck. I'm going Micron.
100%.
Yeah, I'm going Micron.
And then I think Amazon is the clear winner in this one.
Dude, Schwab was up 30% this year. I don't think Amazon, I mean, I'm picking Amazon, but I don't know if it's a clear winner. We're hoping.
Well, it's because the reason I say clear winner is because financials ran so freaking hard this year.
That's true. That's true.
I wanted to start a position in Schwab last year, and I never did.
It's a great company. The amount of money that they make on their ETFs and mutual funds is sick.
Yeah, we use Schwab. I don't mind Schwab. We use it for the rental properties. It's great for their checking.
Are we knocking Amazon out, Matt? What do you want to do?
Oh no, Amazon for sure.
Oh.
But
Yeah, I'm
All right. I guess we can. I don't need to write everything.
You don't even
out.
need to write. Yeah, you don't need to write.
All right. Apple 18T.
18 for me.
Did you say 18T for you?
Mm-hmm. Apple to 0.
Amit, are you going to take a number one seed out in a round of 64?
I'm going with Apple.
I'm taking 18.
Wow.
Because I think a rotation happens out of Apple and out of Alphabet. And I said this yesterday and the day before.
You guys were wrong during the stock draft about Apple. I think you're going to be wrong on this one.
Again. You may win.
Oh, yeah, what were the results of the stock? Oh, wait, stock draft is for July or whatever. So.
Yeah.
No, but I'm just saying you guys, Apple was like one of the last picks because everyone hated it. And it's a Mag 7. It's a freaking Mag 7.
I'm going Morgan Stanley over Coke.
Yeah, so am I. Morgan Stanley.
I'm going Abbott over Johnson & Johnson.
I'm going J&J.
Maddie?
J&J's been on a fucking run. I used to own a lot of J&J. So Abbott's not horrible. Fuck. I know more about J&J, so I'm gonna go J&J. It's not a good reason to pick it.
I'm going Applied Materials over Oracle. I think Oracle has a prove it year next year and doesn't do much.
You're probably right, but I'm picking Oracle. I think the data center.
Maddie, which way is it going?
I don't know much about Applied Materials, so
yeah, Oracle.
yeah, fuck it.
Costco or Raytheon?
I'm picking Costco just because it's Costco. It's an amazing company, you know? Taking Costco.
Steven?
I'm going to pick Costco.
Wow. Okay.
I don't know that Raytheon does great next year and Costco's down. So,
Costco's Call Sir Joseph.
I'm going Blackstone over Berkshire. I'll say it.
I'm going Berkshire. Berkshire still owns Apple and Google. Yeah, Blackstone was down 11% this year. If there's a private credit bubble or issues, Berkshire is easy against that.
I'm gonna choose Berkshire.
Okay.
Ah,
Procter
fuck.
and Gamble, Amex. I'm going Amex.
I'm going Amex.
And then I'm going Meta against GE Vernona.
I don't know if you could easily say Meta over GE.
Ooh, okay.
I was looking at that because it got me intrigued because I do like the turbines. I don't know,
Look at this.
but we're talking about today, so it's 660 on Meta already. I'm going Meta.
All right. A number 2 survives. All right. In the Midwest region, I'm going Alphabet over Amgen.
Yeah, me too.
Okay. I'm going Goldman over Chevron because I think it's going to be a good IPO year next year.
Agreed. I'm Goldman.
Agreed.
I'm going McDonald's over Netflix.
Oh boy. This is a little awkward.
You know, the Big Mac is going to prevail in 2026 over Netflix because of regulatory headwinds with the freaking Warner Brothers deal, and they're going to just go sideways.
Maddie, what do you got? What do you got?
I'm going Netflix.
I
I think McDonald's is being too aggressive.
I am going to pick for 2026 a one that outperformed. Why are you laughing?
Because everybody in the chat is asking what I've been drinking.
Yeah, no, I mean, look, I can see your argument, Steve, but it's a tech company versus a fast food joint. Like, I'm picking Netflix.
All righty.
Did you know there's a Netflix house?
I did.
I'm
Actually,
going
it's
JP
not
Morgan
today.
over Intuitive Surgical.
Is there
Also, what-
multiple Netflix houses or just one?
I think they might be trying to build it out into something. But if they do get Warner Bros. Next year, like, that's really bullish. Like, that's not bearish at all.
It's looking that way.
Matt, what are you at? Morgan or Intuitive? I'm going JP.
I'm going JP Morgan. Intuitive Surgical, I don't think is growing fast enough, and it's already at a premium.
AbbVie
Although
or T-Mobile? I'm going AbbVie.
I'm going T-Mobile on a SpaceX deal.
Ooh.
And that IPO maybe hypes it up.
Do I gamble or do I go with what I think is safe?
You go with what you think's going to happen, whether that's a gamble or not.
Fuck. I guess it really doesn't matter.
You choose AT&T over Apple, but AbbVie over T-Mobile. You guys are wild for knocking out Apple, bro.
I'll choose T-Mobile, I guess.
Okay.
Because I'm a gambling man.
I'm going Walmart over Lindy.
What the hell is Lindy? Hold on, do any of you guys know what? Hold on, Steve just
Isn't
confidently
Lindy a
said-
coffee company?
Hold on, no. Steve just confidently, he sounded so smart. He's like, yeah, I'm definitely going Walmart. He doesn't know what the
Hold on. Isn't that a
He has
freaking...
no idea what Lindy is.
It's Lindy PLC. Isn't that a coffee company?
No, it's a chemical company. What are you
Chemical
talking
company?
about? Dude, you tried to get away with that so quickly. You don't know what the hell they are. It's a global multinational chemical company and the world's largest industrial gas supplier. Chocolate company, coffee company. This guy actually he was trying to be smart.
Are you thinking Lint? Like Lint truffles? Like, what are you thinking?
No.
Exactly what he was thinking.
No. Oh, no. I was thinking Luction Coffee.
Oh, yeah, it's a Chinese coffee brand for sure.
That's why I was thinking that this is.
Yeah, I'm going Walmart easily.
Caterpillar or GE Aerospace?
Caterpillar.
Maddie?
What's GE Aero? Is it just regular GE now?
Yeah, they split it
It's
up.
one of the components that got spun out.
Yeah, the turboprops. Okay, yeah. I'm going cat.
Okay. And then does Intel take out Microsoft?
Yes.
Maddie?
I don't think so.
I don't think so either.
I think Donnie T and Nvidia are going to prop up Intel.
All right. So I'm not rewriting all these here. So we're in the round of 32. NVIDIA versus United.
You're on mute.
Nvidia.
I'm going United.
Ooh. I'm going NVIDIA. What? I don't have freaking a PDF editor on this computer. What do you want me to say?
Okay, Lamb versus MasterCard. I'm going Lamb.
Maddie?
I don't really know what Lamb is.
Lamb Research.
They're in
They
the
do
semiconductor-
electronics.
I just think MasterCard is growing, but they're not growing like Lamb or any of the semiconductor. I mean, like you would need a bad semi year for MasterCard to outperform.
I don't think that we get a bad semi year next year. I'm going Lamb also.
Okay.
AMD Tesla.
Lamb was up 136% this year. Like that's wild.
AMD Tesla.
AMD.
Maddie?
AMD.
AMD has earnings. They have actual earnings. If Tesla gets robotics to scale, then maybe robotaxi to scale. But AMD has earnings.
Home Depot Broadcom.
Broadcom. Easy.
I'm going to Poe.
Okay.
Steve's picking Broadcom.
Yeah. Alphabet
Google,
Cisco.
Cisco. The Googs.
Yeah.
Choosing Cisco.
This is hard.
It's not hard, Steve.
It's so hard because I think Google is going to fucking stymie next year and Cisco can run, but can Cisco really run more than what's stymieing?
Dude, Google might still run to 350.
I'm going Goog. It's hard. Palantir or Visa? I'm going Visa.
I'm going Palantir.
I think Palantir will surprise next year.
Damn. Okay. Ooh, Lily over Apple Oven for me.
This one's actually hard. This one's actually kind of hard.
Very hard. Not as hard as the next one.
Oh, the next one's hard too. I'm going Eli Lilly as well.
All right.
I'm going Lily. Yeah, I don't really know what Apple Oven does. So
I'll make it easy. I'm going Micron over Amazon.
I'm going Amazon.
I'm going Amazon.
Amazon better perform, bro. It's gonna make us look.
I kind of
bad.
hope it doesn't, so I could buy more.
I feel you, but it hasn't for so long. Like, like you've had so much time to buy, and I know you have bought so much, but I feel you.
I'm going Morgan over AT&T.
Oh, now we want to go against AT&T, not with the company that's doing $100 billion in buyback.
Right.
Goodness
Yes.
gracious. All right, I'm
Crazy.
going Morgan too. I'm going Morgan.
Fuck. Fuck.
I'm going Oracle. Easy. Fuck Johnson & Johnson, bro. I'm going Oracle.
Yeah, I'm going.
Data centers, baby. Ride or die. Let's get these GPUs up and running.
ruin a midstream.
Oh God, Costco or Berkshire? I can't believe I'm about to do this and say Costco over Berkshire.
No, I'm picking Greg Abel going Berkshire.
Choosing Greg Abel.
Dude, why are you picking Costco over Berkshire? What are you doing, Steve? Like,
Because I think Berkshire is gonna have a shit year.
why?
Amex over Meta.
Berkshire owns Google and Apple. What do you mean shit year?
Yeah, but their freaking equity portfolio is a small portion of their business.
You don't think their businesses are going to do well?
Businesses are great. It's
I'm
insurance.
saying
You not like Dairy Queen, Steve?
that I love Dairy.
Fruit of the Loom?
I love Dairy Queen. I love Duracell. Okay,
You like C's candy?
C's Candy's so legit. Oh my God, their
Dude, come on.
caramel is to die for.
Okay, American Express Meta. I'm going Meta.
I'm going with the Zuck.
I hope so. I've puts at 700. So
All right, Goldman or Alphabet? I'm going Goldman.
I just feel like Alphabet needs to cool off. But is that just like a first half thing, or is that like a full year thing?
It's full year, end of year. Which one?
You think it's a full year that it's going to cool off, or are you just saying?
Oh, I thought you meant. Are you asking for the? No, I don't think it's full year. But Goldman, I still can't bet against Google. I think it's Googs.
I think it's Goose.
Even if
Okay,
it cools down.
Goog.
I think it'll cool off for a couple quarters, but I think towards the end of the year, it's gonna this.
I'm going JP Morgan over Netflix.
Matt, you go.
JP's has been on a tear though.
That's the issue. But then again, why would financials slow down next year? That's
Yeah.
like there's no reason for them to slow down unless we get a recession. I think I'm going JP.
Steven?
JP.
Okay. I don't know why my gut wants to go with Netflix. It doesn't matter.
I'm going Walmart over T-Mobile.
I'm going T-Mobile.
I'm going
Okay.
T-Mobile.
Damn.
Walmart's at all-time highs already, bro. Like that might actually have a slowdown. Not a slowdown, but like a chill out.
I'm going Microsoft over Caterpillar.
I agree.
Yeah, I do Microsoft.
All right. NVIDIA Lamb. I'm going NVIDIA.
Dude, Lamb could beat them. Like legit. I'm going NVIDIA, but Lamb could beat them. Like it's not crazy to imagine Lamb outperforms.
I was gonna choose Lamb, but I have no idea what Lamb is. So
AMD or Broadcom.
Oh, this is the biggest one I think we've had to think about. The biggest one.
that's tough.
That's actually like not. You know what? I'm gonna ask ChatGPT what she thinks,
Damn, look at Amit cheating.
and I'm gonna tell her don't give me any explanation. Just give me one answer. Which one do you think?
It's just like if you go by the scientific method of
Yeah, I'm
it's like
no, shut up. Like
it's like give me one sentence.
okay. Do you guys want to know what she picked?
Yes, what did you pick?
I feel like it's cheating if I tell you. Let me ask Grok. Let me see. All right, I will tell you if they all three agree.
All right, I'm going Broadcom.
I think it chooses Broadcom.
Okay, well, ChatGPT just said AMD.
Wow.
What's his name? So it's Broadcom because you guys both picked it. But Grok said Broadcom, so let's find Gemini is the final one.
You
Matt,
pay for all of them? Which
Yeah.
ones do you pay
No,
for?
I pay for GPT and Grok. Grok's more
Matt,
so
you're
for the
going
Twitter.
Broadcom?
I'm going Broadcom.
All right.
Gemini says Broadcom, so you guys got 2-1.
Okay. And I guess freaking Google is on here twice for some fucking reason. ChatGPT made one mistake on this whole fucking thing.
Well, there's
So-
two different chairs.
It's not.
Oh, that's why it's two different fucking shares.
Yeah.
Did not make a mistake. I did not realize it put both of those in there.
You're mentally made a mistake, Steven.
Fuck.
I'm
I
going.
would just play it out. Fucking. I'm going Palantir.
I'm going
What if it was
Palantir.
Google versus Google? That'd be crazy.
I'll knock them out.
Are the C shares going to outperform, or are the A shares going to outperform?
I'm going Amazon.
Amazon versus AppLovin? No, Lily.
Lily.
I'm going.
Steve, you chose Palantir.
Yeah, he chose Palantir.
Steven. He's choosing Lily over Amazon.
No, I'm going Amazon over Lily.
Me too. Amazon.
Alright.
You know, Lily, I think will do well, but I think it's Amazon.
All right. We're getting through this. I'm going Morgan Stanley over Oracle.
Yeah, I agree.
I'm going Meta over fucking Berkshire. Is anybody going to agree with me?
I'm going Berkshire. So Maddie, you.
Oh my God.
Man.
I'm doing
I
it to
think-
kind of troll, but
I think Berkshire will have a good year, but I think I'm gonna have to go with Meta.
All right.
I
Thank
wanted,
you.
I wanted him to make Berkshire just to see what Steve would do.
Fucking
should've-
Berkshire.
He would
made
just
the
have flipped his
sweet
desk and just walked
16.
out.
No, could you guys
That's
imagine though if
great.
Berkshire actually beats Meta twice? They beat it this year.
All right. I'm going Google over freaking Philip Morris.
That's JP Morgan.
JP Morgan shit. Google.
I'm thinking Google too.
You say you're thinking Google. Does it mean you're going Google?
No, I'll go Google.
All right.
Dude, SpaceX IPO. I mean, they're gonna get a massive EPS boost. Like,
Good point.
That is a good point. I'm going Microsoft over T-Mobile.
Yeah, I think Azure is going to continue to do extremely well.
All right, now is where it gets interesting, everyone. We're in the Elite Eight. We're now picking our final four. And this is where it gets difficult. Is now you got NVIDIA versus Broadcom for next year.
Is that NVIDIA? Looks like
NVIDIA versus Broadcom.
MAA is what it looks like to me.
You tried writing.
it looks like a fucking toddler fucking scribbled.
Okay, you know what? I clicked the draw thing. I'm using goddamn mouse because I don't have a PDF editor on this computer. Okay, doing the best I can.
Someone took more shots than me tonight. Like, I'm going to video. I'm going to video.
You're going NVIDIA, Maddie. What are you going?
I'm going Broadcom.
All right, Steve. What do you
I
got?
can't believe I'm going to do this.
Don't do it. Don't do it, Steve. Do not do what you. Steve, think before you speak.
I am
Don't do
thinking,
it.
but the
No,
reality is that Broadcom can rally back to 450.
This is NVIDIA we're talking about.
Right, but I only think NVIDIA is going to do 20% next year.
All right, make your pick. Whatever you got to do.
So hold on, I got to get a calculator. I have a
No,
spreadsheet.
you don't need a calculator. You need to go with your gut. Like, what do you think happens?
Somebody tell me where Broadcom is right now. What's share price?
347 or something like that.
347. Oh, that's not good. 22.47% upside if it hits 425. NVIDIA's at what? 187?
Yeah.
And going NVIDIA is if it goes to 250, that's 33% NVIDIA. I almost went Broadcom though.
I understand why, but I think it's NVIDIA.
No, that's why I get the spreadsheet out for that one. Just do the math. All right. So NVIDIA is the first one in the final four. Palantir versus Amazon.
Ooh.
I'm going Palantir.
I'm going to Amazon.
I was supposed to write it here. Shit. Hold on.
So if we're not finished in time, we'll pause. Let's leave the final round for after the bell. And I'm sure it'll take us a couple minutes to get there. So
I'm going Amazon also.
Although I do think Palantir will have a good year. I think people are sleeping. I think there's going to be some rabbits pulled out of some hats for good old PLTR.
Okay, last two. No, we got one more.
I'm going Meta over MS.
I'll go Meta.
Yeah, me too. People are saying, is this secret code alien talk?
It's not easy. Okay. Google, Microsoft. This is hard.
Ooh.
I'm going Microsoft, everyone.
I'm gonna liquidate my bladder before we have to ring the bell.
Okay. Maddie?
I'm going Microsoft, I think.
You know what's crazy?
You guys have pre-fireworks? What's going on?
It's 11:57. Out of these 64 companies, everyone, look at our final four. It's the Mag 7. It's a Mag 7 showdown.
Jesus,
NVIDIA, Meta, Amazon, Microsoft.
I didn't think.
Who would have thought that?
I would not have with the list that we started with.
Who would have thought that? It's a Mag 7 showdown.
Steve, I need to buy another watch in 2026.
You know what, Matt? You're flossing that pretty thing on your wrist over there. I don't know if you need to.
What are you talking about, Steve?
We John Cena right now? Can't see you? All right, I need to put a poll out in the chat. Hold on. Start a poll. Did you
Fireworks going off for the last 4 hours in Miami? You
it
mean
would
gunshots?
be a
Let's get
Mag 7 showdown in the final four?
All right, Steve. So let's get rid of the screen and we'll ring the bell. Then we'll go to the final four.
All right, Amit, real quick, did you think it was going to be a Mag 7 showdown? Look at our final four.
Honestly, yeah.
You did think so?
Of course. Like that's how it was gonna play out. Like you have to really believe in some upsets, which there probably will be next year, but it's hard to bet against them. Given it a bracket. All right, folks, we got 30 seconds until the end of 2025. Thank you, everybody, for being here. Deeply, deeply appreciate being together with this community. 5-10 years from now, we're going to remember that to celebrate 2026, we were all here together nerding out about stocks because that is what we do every single freaking day.
I'm going to try to convince everybody to do this every New Year's.
I think I speak on behalf of all of us that we appreciate everyone being here as much as
absolutely. This community is amazing. Thank you, everybody.
We enjoy it, and we only do it because you guys are here. Thursday, January 1st, 12 a.m. Happy New Year and welcome to 2026.
What brand bell we got today, man?
You have to do a long bell. You have to do a long
Is
bell.
that the Robin Hood bell? Which one is that?
Oh no, this is Austin's bell. This is the 100,000. Give me a custom 100 grand.
Nice.
I forgot about that.
Nice.
What are we gonna get, Steve? We crossed 10K.
That's freaking great. You're not getting me anything.
Steve's on his path to. He was on a war path to 20.
Thank you, everybody. This is you guys are great. Really appreciate everybody being here. And just like Amit said, I think I speak for the three of us that we really appreciate you guys showing up every time we stream. And this community is amazing. Thank you, everybody, for being here. So without further ado.
I was gonna say, yeah, I agree. You guys are great. I'm glad that. Otherwise, I'd have nobody to talk to. None of my friends want to talk to me about stocks. So,
No, but that's
None of my
true.
friends want to talk to me
they want
about
to talk about
stocks either.
football and God knows what, and like, I'm just like,
Bro, but it really is such a like. It's not easy to come together on a concept as nerdy and as weird as investing, but there's thousands of us here that every day, literally every day, that's all we think about.
Yeah, I mean, the crazy thing is my friend group that I talk about stocks with the most is this friend group. Like the friend group from work and the friend group from people I grew up with, they don't really have an interest for some reason. I don't know why.
I just think
They
everyone
want to know what to buy, and that's it.
everyone needs to find a community in life, whether it's a Pokemon community, a sports community. Like if you don't have community in life, your life is likely not really that, forget exciting, but just like filled with purpose. Like you need people around you to celebrate anything with. And the meetups, coming together, being on the streams, the articles, the videos, the podcasts, all of this, the comments on Twitter, the chat, it gives people a sense of, it gives me an immense amount of purpose. I mean, I don't know what I would be doing if I didn't have this. So I'm very grateful for it. Very, very grateful for it.
There's one comment that's interesting. Men don't like to talk about money with each other, but we're not talking about money per se. Like we're not talking about how much money we have or how much money we make or anything. Right? We're talking about investment ideas. To me, it's completely different. I think it's very healthy to flush out ideas with people that you trust that can maybe see something that you're not seeing. And I just think it's weird that the people that I know that I interact with all the time, they really have no interest.
Yeah.
Two brothers says, wait, why the F am I here listening to you guys right now? I'm at a party.
I love that.
I love it.
Put it up on the big screen. Make everybody follow us.
Make everybody watch it. Watch the final.
Imagine, bro, at a New Year's Eve party watching a stock bracket.
Could you imagine if somebody decides to have a freaking watch party for this next year?
That would be funny. No, because I mean, Amit will probably sell out a stadium or something next year.
That would be legit.
Dude, this kid will literally have over 3 million people following across X.
I hope so.
In 5 years, easily.
I certainly hope so.
AK meter to the fucking man, dude. He's killing it.
All right, let's get down to the dirty. Is NVIDIA taking out Meta?
This is a tough one.
Wait, hold on. I'm sorry. I screwed this up.
Of course you did.
It's supposed to be NVIDIA versus Amazon.
What?
Oh, no, he's right. He's right. It's NVIDIA versus Amazon. Yeah. That's even
I
tougher.
did it the wrong way. And Meta versus Microsoft.
So if Amazon gets to 300, Amazon 300 minus 230 divided by 230, that's 30%. NVIDIA 250 minus 188 divided by 188, that's 32. I'm going with NVIDIA. I go with NVIDIA. I think Amazon will have a great year, but I'm going with NVIDIA. But I could see this easily going to Amazon, like easily.
That was a
Maddie,
big one. I'm going Amazon.
I'm going NVIDIA.
All the power to you. I really hope it works because NVIDIA.
I think NVIDIA gets a 250. I really do.
What's your sell price, Steve?
I don't have a sell price.
It's a feeling.
But I think NVIDIA is fine next year. Halfway through 2027, I need to reevaluate because I think that's when we start potentially seeing a structural crack in CapEx. So
It's not that I dislike NVIDIA, guys. That's just I think the easy money has been made in it. It's not to say that it's going to zero, nothing like that. But I just think that I don't know. It's something that I'm cautious about for me personally, where I think that there will be eventually a turnaround where people start to say we can't spend as much CapEx. The same thing happened in 2021, 2022, and there was a pullback at a lot of people's capital expenditure. I think the second half of next year might be that for NVIDIA, unfortunately.
So Meta, Microsoft.
Look, I love Microsoft as a business. I think it's risky to pick Meta here because we don't know what the hell Zuck's doing with all this money. Like, we really don't. He's buying this freaking Chinese company now to get some more. Like, honestly, the answer should be Microsoft, but I'm going with Meta because Meta's multiple is just better than Microsoft. But realistically, Microsoft should outperform. But I'm going Meta.
I think Meta's got an advantage right now.
And we have a NVIDIA Meta championship game here.
I would not
So
have
what's-
guessed that if you'd asked me at the beginning.
I would not have guessed this at all. Meta NVIDIA.
Okay, the answer is easily NVIDIA here. If I'm assuming
I
Meta
don't
gets
know
an
about that.
let's do the math. 850 minus 660, where it's at right now, divided by 660, 28%. So Meta's got to get to $850 to match NVIDIA.
Oh,
closing at
shit.
around-
You know what? You're right. Shit.
That's hard. I don't think that's as easy as
It would have to get to 900 to outperform where I think NVIDIA is going to end up.
So then bring your NVIDIA target down a couple percentage points. It still has to do pretty well.
I can't.
Now, granted,
Wow.
Here's the thing also, if NVIDIA underperforms, is like, do we see the rotation into, oh, Google and Meta can go up and NVIDIA can go down? I don't think this year that happens. Maybe 27. Then again, can Zucks actually pull off explaining why he's spending so much money? Because right now, advertising is not cutting it. It's just that simple.
Yeah, and margins are shrinking for Meta as well. And the thing that I'm trying to think of as well is like, if there's a signaling that CapEx is going to slow down, is that going to hurt all of the Mag 7 or just NVIDIA? And I think it's going to be tough to say that only NVIDIA gets it. I think all of them will take a shrinkage on some of their multiple, because I think if CapEx slow down, maybe that makes people weary that all this spending might be for naught. And I doubt that that'll be the case. I'm cautiously optimistic that all this is going to garner some sort of revenue increase. But I don't know. That's tough. But you're right. I mean, yeah,
I agree with you.
900.
There's a world where NVIDIA goes down because CapEx goes down and Meta goes up because margins go up because less CapEx. But to your point, they could be punished like all the Macs have about it. Wait, Steve, put a poll in the chat. See what the chat thinks.
Yeah. Let's do that.
So don't say your answers yet. I'm going NVIDIA. You two still have to pick. Let's see what the chat says. I think the chat's going with Meta here.
All right. New poll coming out, everyone. Who wins? NVDA or Meta?
Let me do the same.
Oh my
Gonna give
goodness.
Wow, a lot of votes coming in hot.
Meta, right? That's what people are voting for?
120 votes, 130. Can we get to 250 pretty quickly? 166, 61%, 39%.
I have a good old 15 votes on my side, Steve. Oh, now 18, now 19.
We're at 60-40. Wow. We're leaving the poll open for 1 minute, everyone.
Now 20, 21.
1 minute, everyone. 60-40 still. Get your votes in.
China revenue coming back to NVIDIA. That's another argument.
Those
Do
are
you
actually
think they could
gunshots.
chill
outside
with
of
the
GameStop.
fireworks? Like, come on.
Oh, we just had a flip on my side, Steve.
257. We got 30 seconds left. Get your votes in. Once it hits 12:12, I'm ending the poll, everyone.
I got 34 whole votes over here. Appreciate you guys. I think I got people coming to my chat now because they want to vote on mine. Because I just went from like 84 people watching to like 96. And then a bunch of votes just came in.
11, 61.39. We are going to close it. All right, we just crossed over 300 votes. We're going to close it. The poll is NVIDIA 61%, Meta 39%, 303 votes.
I had 56% for NVIDIA, 44% for Meta, 41 votes.
All right, so who are we going with for our champion, guys?
I
We
got
going with
NVIDIA.
the chat or are we going with Meta? What are we doing?
Like,
Of
you gotta
course,
go with the
NVIDIA
Jets.
would win this. bro. Steve, you're going with NVIDIA, right?
I want to see what Maddie does.
I want you guys to win. I want NVIDIA to be big money for you
I
guys.
win both ways. I got both of them in my portfolio.
I mean, if NVIDIA slightly underperforms Meta, it's not like we're going to have a bad. So it's realistically just what do you think is going to outperform?
I mean, personally, I believe that Meta will do better.
All right, so Steve.
But I want NVIDIA to win for you guys.
I am going NVIDIA.
NVIDIA wins the New Year's Eve stock bracket challenge.
And this goes back to what I've said, that I think this becomes an everything rally led by the Mag 7 and the big just get bigger. We just did a round of 64 and we had the Mag 7 in the final four, which I did not necessarily think was going to happen.
And Palantir.
And the Palantir is in the final four. Yeah, that's why I mean Palantir was in the Elite Eight. Palantir was in the Elite Eight.
Surprise, NVIDIA win. That's crazy, dude.
Final four is NVIDIA, Amazon, Meta, Microsoft. Elite Eight, we had Palantir getting to Elite Eight's very interesting. You had
We couldn't do SoFi or Nebius guys because they're not in the S&P.
Google, and you had Morgan Stanley. So outside of the Mag 7, you had Broadcom, Morgan Stanley, and Palantir making it to the Elite Eight. Really interesting.
This was the top 64 stocks, folks. We didn't intentionally exclude
Yeah,
it
top 64 stocks in the market.
by market cap.
Crazy. Crazy.
Well, let's hope we all got blessed with a good year, even if it didn't turn out to S&P 7,000. Let's just hope. Let's just hope, because we get so short-sighted. Let's just hope 2026 can give us another 15% on the S&P, because that means all of us will probably be up a bit more than that. That's
thank you for everybody who's been here. I'm going to go through the supers real quick. Spencer, thank you so much. Sid, thank you so much. Orgy, so much. Spencer again, thank you. Jarrett, thank you very much. Joe's, thank you. PB, thank you. Jarrett, thank you so much. Dougie, 2 times, thank you. Sid, thank you again. Jarrett, thank you, and thank you.
Champion.
Treat, thank you so much. Mr. Mosherini, thank you so much. And Matt, thank you so much. Really appreciate all the support from everybody. Truly appreciate it. Hopefully, everybody enjoyed the stream. And hopefully, it is a good 2026 for all of us.
It's been a fun year. It's been an exciting year. Very, very grateful I got to spend it with you guys. I talked to you guys more than I talked to most other people.
Same here.
I appreciate it. And here's to a 2026.
Cheers, brother.
Oh, wow.
Oh, wow. Bunch
Guys, thank you so much.
You guys rock. Thank you.
You guys, this is the best community. Truly appreciate it. You guys are great.
Yeah, any of you guys watching, I'm gonna put Amit's channel. Obviously, I think everyone here follows Amit, but I'll be putting Amit's channel.
Some of you guys West Coast and Central Time don't have a New Year yet. So.
Oh yeah, good point. They need,
I
they need somebody to walk them through.
I don't know if I can stay up for the West Coast New Year, but I can stay up for another 30 minutes or so.
I think I'm calling it.
So just give me a sec. I'll be right back.
Oh man.
I'm going to bed, bro. I'm waking up tomorrow, hitting the gym, starting off the new year.
Dude, good for you, man. That's awesome. How do you like the gym in your place?
It's really good. Like
Yeah?
really good. Yeah, like
I miss
one.
I do miss it because like during the pandemic, like when I came back from Trinidad, you could check the videos. I was like, I don't want to say like thin, but I was thinner for sure. And that's what I would do, man. I had like a really clean schedule. So it was like, my meetings would be like 8 to 11, knock it out. And then I'd like every day I had the same meeting. So nothing was like variable. And so when I knew my meetings were done, I would just pull out the like lunch meat or like whatever chicken wings or whatever steak or chicken breast, etc. I'd put it out on the counter, go do my workout, let it warm up for room temperature. By the time I was done, turn on the grill downstairs on the 8th floor, come upstairs, shower, go downstairs, the grill would be ready. Like, yeah, I had it all like timed out perfect. It was beautiful.
ETF, thank you.
You got hot
Admit,
Curtis.
there's no way you're going to the gym tomorrow.
Dude, I'm absolutely going to the gym tomorrow.
Do me a favor, drink some water before you go to sleep.
I should probably do that since I haven't done that. Yeah, no, I think that routine makes sense, man. That's the goal. Is I want to get a routine next year as well. Like when you like really stay like when you have a routine, discipline wise, consistency wise, like even something as simple as making sure the chicken is ready before you come back from the workout, like that stuff matters a lot. So
yeah, I need to get better at it.
It's gonna be packed Jan 1st. Yeah, 100%. It'll be packed.
Tomorrow's the worst day to go to the gym, by the way.
Luckily, it's his building gym, so he's good.
Yeah, I was saying it's a building gym, so it should be okay. Should be all right. All right, guys.
All right, Amit, go get some sleep. Thank you for being here.
You're the man, Amit.
Thank you, everybody. Love you all. I will see you guys
Friday. You're off tomorrow, unless you want to do our show tomorrow night.
No, I'm gonna go home tomorrow. See family.
Okay.
So Friday. No.
Smart man. Family time.
Later, Amit.
All right. Later, everybody. Happy New Year.
Happy
Good
New Year,
night.
brother.
And then there were two.
Steve, what are we doing?
I mean, June's not wrong. I mean, the community can convince me to stay on for a little bit.
Steve, how do you keep your hair so fresh, my guy?
What do you mean?
How often do you go to the barber? I need answers.
I'm the worst. No, you know that I'm the worst with going to the barber.
What are you talking about? Your hair looks the same all the time.
No, it doesn't. I go to the barber like once every 6 weeks, 7 weeks.
There's no way you go to the barber every 6
100.
weeks.
Dude, I stream. You can tell. You can see the timeline on my freaking cuts.
Let's get June on the stream. Everyone wants June.
I mean, I'll send her a
Doug.
link if she
Get
wants to
Ray.
come on.
No, I've tried getting June on a couple times. She hates me. She doesn't ever want to come on.
June, if you want to come on, you're more than welcome. But Matt, in all seriousness, this is how my hair dries. I comb it when it's wet, and this is just how it dries.
You're a
And
champion.
would you like me to prove it to you? You ready?
You gonna, oh,
I can move my hair. If I had gel or anything, I wouldn't be able to do that. Like
thanks
it
for
just
joining us.
freaking dries like that.
You know what I'm excited for, Steve? I'm
What?
fairly certain. I'm like, I don't want to be 100% because I don't want to make anybody feel bad, but I'm like 70% certain that I got a Palantir Christmas gift.
Ooh.
So, and I haven't been home. So I'm excited to get home tomorrow and fingers
Look at
crossed that
you.
it's on my doorstep.
Look
Fingers
at you
crossed.
getting a Palantir Christmas gift. I need to shave. I didn't realize how bad my beard is, like how long it is.
You look like Gandalf.
I need to shave. Looks so bad.
Tell him why you have the beard, Steve.
Because it's freaking cold out, and when I walk through the city and the wind's whipping into my face, I'm not as cold.
You're a good man. You're the future.
That's legitimately the reason.
You're the future, Steve.
You're the future, Matt. So
I have a question. How much are you? How much of your portfolio do you use the S&P 500? Like, I wonder if I'm going. Like, I don't want to say I'm struggling, but I'm just trying to understand if I need to, because I currently
I'm
put
going to
money in.
include retirement accounts into this.
Yes, I do
It's
as well.
probably 40-50%.
Yeah. I should recalculate mine. It might be 40-50 for me as well.
It's 40-50.
Well, if I include 401k
Yeah,
contributions,
you have to. It's part of your. Look. You can't use the money now, but it is part of your long-term planning. You got to use it.
It's been a while, man. I need to. I think tomorrow, when I'm sitting at the airport, I'll probably calculate it because I put a lot of money in my 401k.
Yeah,
Not. I wouldn't say it's a lot, but
no. Listen.
enough.
You're probably. If you're maxing out and you're maxing out for a decade or more, you have a good amount of money in there, and it's probably when I think about, and it's not just a 401, it's a Roth from the back door. There's all sorts of things. So, and yeah, it's got
My
to be
man
40,
Curtis,
50%.
Happy New Year, brother. I know it's not New Year's for you yet, but Happy New Year.
Like I wouldn't be surprised if it was more than 50%, because I'm also going to say I will consider a total index fund and that type of stuff S&P. So, look, it's a hedge against myself. I don't need to go gangbusters on an individual name. And when the market goes down, that's why I can truly sit here and say I don't care. The reality is that looking at long-term planning for what I think is best for me is this strategy. It's, personally, and this could change, but personally, at my age, I don't think I would even consider exiting any of my S&P for at least 15 to 20 years.
Try to pay the big bucks, Steve.
So,
No, I personally don't max my 401k. I max the contribution that I get from my employer.
crazy talk.
And the reason being is because I've just always wanted that flexibility that if I wanted to start a business or real estate, that I had that. And I don't do a lot of buying and sell, or I don't do a lot of selling. So the only taxes I'll have to pay are from dividends. And there aren't a lot of dividends in my portfolio at the moment. There are a lot of covered calls and premiums from selling that and puts. But and I get a lot of flack from people. They're like, Matt, and it's like, but I don't plan on being in the workforce until I'm 60 anyway. So, and maybe if I am, it's because I really like what I'm doing. And
Well, the reality is it's hard to retire early just from an aspect of healthcare. Like if you're not eligible to get on, I always get confused whether it's Medicaid, Medicare, but if you're not eligible to get on there, it's really difficult to retire early. Like all these people that are doing the whole fire thing at 40, 45, I'm always like, what the hell are they doing not working for that long and drawing down their assets that early in life? And paying for freaking healthcare is so expensive over a 20-year period. And even when you get to 65, not having supplemental can be a problem. So,
I mean, I'll always be doing something that generates an income. So it's not like I'll retire. Like if I leave the workforce and what I'm doing, which I have no plans for at the moment. I mean, eventually I anticipate I'll wind down, but I'll always be doing something. So it's not like I'll just be like on a beach doing nothing. So
yeah, I mean, look, the reality is one of us is going to have to work and for healthcare.
Meaning you and the boss lady.
Yeah, I don't think it's realistic. I mean, yeah, can you make the math? Yeah, at some point you can, but if you like what you're doing, why do that? You know what I mean? Sense, thank you. Not really answering a lot of stuff tonight, but I will tell you, Benjamin's Steakhouse was phenomenal. It's very good. Right.
I did a really good Korean place right down the street from the Empire State Building. I loved it.
So I got something for you and Dougie when you guys come out.
Korean or food or
No. I'm giving you and Dougie a bunch of cigars when you guys come out to New York at the end of the month.
Yeah, no, you told me. I'm excited about that.
Yeah.
That'll be good.
And you guys can, depending on where you guys are staying, you guys can go up. There's 2 cigar lounges you guys can go to and smoke, so you're not in the cold.
Yeah, that'd be good. I need to figure out which ones to go to.
So, in all
I didn't end up doing it when I was there in September.
You and Dougie should stay in somewhere in Midtown and go up to the the Macanudo Club on 63rd and 5th. You'll love it.
Yeah, I need to see some good New York spots.
I
was able to do a good bit. I was able to do a good bit when I was there, but not obviously New York is New York. There's a billion things that you can do. So
yeah, so did you happen to catch Tanner and I discussing movies
yesterday? No.
You ready for my top 25 list?
Yeah.
We did a poll and I won the top 25.
They pay the big bucks, Steve. And somebody's asking if I like to sell calls or puts more. That's very dependent upon the stock. And, that'd be like me saying, I like drinking or eating more. It's like, I don't know how to answer that, right? It really just depends on the current situation for me.
And these are, if they're on TV, I'm watching them. That's how we made the list. Like, it doesn't have to be like the most perfect movies that everybody is just going to say. Like, if they're coming on TV, I'm not going another channel. Or if I'm surfing Amazon or Netflix or whatever, and one of these is in the thumbnail, it's getting clicked. So, first off, go down the list. Have you seen these movies? Have you seen 13 Hours?
Yes. I haven't seen Days of Thunder. I don't know what that is.
Okay, so we'll go no's. It was probably so Days of Thunder, no. What else haven't you seen? And is Friday Night Lights the best football movie?
That's tough.
I have it over Remember the Titans, which is very hard to do, but I like that they don't win in the end. It just makes the story so much better for me.
I really liked Friday Night Lights. I would have to rewatch it. Well, I remember Friday Night Lights. I would have to rewatch Any Given Sunday.
Dude, Any Given Sunday, I used to hate that movie, and it grew on me. And now I think it's a top 4 football movie.
Yeah, I'd have to rewatch. It's been too long since I watched Any Given Sunday.
It's so good.
But I love Friday Night Lights.
Friday Night Lights is so legit.
I also like the TV show, but
I did not watch the TV show.
Steve, I think you might like that.
Maybe I should start.
If you like the movie, I think you'll like the TV show. Different people, but same sort of feel.
So what else have you not seen? Is Days of Thunder the only thing you haven't seen in here?
Rounders with Vince Vaughn, right?
No, don't fuck with me like that. Come on.
No, I'm not.
You're thinking Swingers.
I'm thinking Swingers.
Rounders is the poker movie with Matt Damon and Ed Norton and John Malkovich.
Yeah, I've seen that.
All right.
That's a really good scene, John Malkovich.
You've seen The Color of Money, right?
50-50.
Paul Newman, Tom Cruise, the pool hall movie.
Yes.
It's amazing.
Seems
Makes me
so
want to go
yes.
shoot 9-ball right now.
True Romance.
Oh,
Like-
dude, don't kill me like that. You tell me you haven't seen this.
Like not the zombie, the vampire movie?
No, that's True Blood.
Dude, I don't
The
know.
TV show, True Romance, Christian Slater, freaking Brad Pitt on the couch, Michael Rappaport, Christopher Walken, Dennis Hopper,
No.
Gary Oldman. You seriously go watch True Romance. If these are the two movies on my list you haven't seen, you need to watch both of them. But True Romance is incredible. Everyone in the chat, have you seen True Romance? Like, I'm shocked that you don't like True Romance.
It's not that I don't like it. It's just that I've never seen it.
No, I'm just saying, like, you haven't seen True Romance. That's crazy. Oh my god.
I bet if you showed Amit this, he would say that he hasn't watched.
Oh, I already talked. He's seen like 5 of them.
See?
Crazy talk.
I accidentally turned on True Romance when I was a kid and I loved it. Heard it here first, Steve.
Heard it here first, Maddie.
So you're sticking with the 40 to 50% spy. You like that? I think that's a good.
Yeah. And if I had to go top 5 out of these, like what I could just watch at a drop of a hat, American Gangster
Oof.
is a drop of the hat movie for me. It's a perfect masterpiece. Casino Royale is in my top 5. And I know that's sacrilegious to a lot of people, but I will watch that movie at any given time. Daniel Craig is the best James Bond. Goodfellas is in my top 5. The Godfather is in my top 5. And I will tell you right now, rounding it out, Top Motherfucking Gun is in my top 5. I will watch that movie at all times.
So Steve, you're thinking 20,000 for spy?
Yeah. In 10 years? Yes.
All right, so we'll take the middle and say 17.5.
Only because here's my thing to you. Do you think the market is going to do worse, better, or the same over the next decade? Like, I think we're going to replicate the next decade at worst. And I know that going out 10 years is really difficult, but I mean, when you think about how transformational technology has been and where we are today and the cash flows of these companies and the potential for robotics and AI, it's hard for me not to see the market at least replicating what we've done the past 10 years. That's why I say, like, I am so bullish on just being an index investor.
So, okay. So I don't discuss a lot about how much portfolio size is, and I don't plan on doing it here tonight either. But
I never talk dollars, but I have no problem talking percentage.
so I'm trying to think about how I put this as a percentage, but I do want to get something accomplished. So I'm trying to understand where I want to end up with an S&P 500 position and by 2035 if I were to continue to load money into it. And I'm trying to think what is a good amount that I would want to have in there. Recognizing that what I have right now at this point would be double and then some, because you're saying we're going to go from 700 to 1752,000 on the SPY. So that would be at least a double, if not almost a double and then some.
Yeah, SPY's at 61.92. We finished the year. Okay.
69, 12, 69, 12.
At 4 p.m. it was 681.92.
Yeah, I thought you said 61.
No. 681.92.
Got it.
So a double from there is 1363. All right. And then if we add another double from the original, it gets you to 2045 a share on spot.
So you're saying we're going to get 200% return.
Yeah. I'm just saying that
Compounded is what? What's 200% over 10 years? Let me see. Annualized.
I'm just not seeing a scenario where, and look, something could happen, but you're going to have more. And here's the other thing you got to remember. We are not in an era where people have pensions, okay? Most people are putting into a 401k or a 403b, and that money is going into either a total market, a S&P 500 index, or a target date fund. And with that happening, you're just going to get more and more of what people call an indexing bubble, but it's not a bubble. It's just where cash is going. Because if we didn't have these index funds, cash would be flown to the top anyway because they're the greatest companies in the market. So I don't think it's outrageous to think that this is a good idea. And yeah, when you look at technology and you look at where we can potentially go and all the margin that can be unlocked and value that can be created, I just don't think it's unfathomable that we can replicate the last decade and the next decade. I mean, pension funds are not a thing anymore. And everybody coming into the workforce, there's going to be even more money going into index funds and more money buying these companies because more people are going to be buying mutual funds and ETFs that are made up of individual stocks. So
that what you stated was what the fuck? Whoops, I messed up. What you stated was 11.6% annualized.
that's what it comes down to.
Yeah.
Okay, so that's right on target for what the average is since 56.
And so where I'm thinking, which is like 1,500, that's 8%. So I was thinking just like a small, not as small, but like just even a base 8%. So let's shoot for this. Let's just say I had 100 shares of SPY or something like that.
And you want to get to 200?
No, I mean, I'm just trying to understand like with how large my portfolio I want to be.
But why do you want to cap the SPY though? That's the thing.
I don't want to cap anything, but what I'm trying to understand is like at some point you probably want to put money elsewhere, right? So it's like if I
but that's separate money. Like look, I have an idea of what I want in my retirement accounts by the time I retire.
Well, that's
the way I look at it.
That's what I'm trying to get at, right? Is if you think that you're going to be at 1,500 or in your case 2,000 a share for the SPY or around that, then how many shares?
You have 1,000 shares to know.
Exactly. So I'm trying to understand. It's like, okay, well, is 2,000 shares enough? Do I want 3,000? Do I want 4,000 or equivalent? Right?
Let's do some simple math. Take ages out of it. Okay. If you get to 1,000 shares, or if you have 1,000 shares in the SPY, and the S&P over the next 10 years does what I think it's going to do, you will then have just over $2 million. And if you still have another decade or two until you can technically draw that money out, and it just sits there in the SPY, theoretically, you should be retiring with around $8 million. If the market continues on that path.
So I'm saying
it's all time value of money. I mean, if you get to 2 mil and you have 20 years left, there's a good chance that you may get to 8 million. Now, if you only have 5 years left or 10 years left, you may get to 2.7 or you may get to 3.8. It all depends on how many years left you have.
Well, that's what I'm trying to get after is like, on a like what for 45 years old, let's say, what is a good amount in SPY?
I don't know that there's a right answer for that because everybody starts putting in at a different time. It's more when you get to 62 and a half or whatever the age is that you can start drawing down on it, right? What is that number that you'd like to get to? And then you just work backwards.
Well, that's
Like
the thing.
there's
I'm not aiming for 62 and a half. You're aiming for 62 and a half.
well, but you're really going to take a penalty on withdrawing that money?
Why would I take a penalty? It's a lot of it's in the individual brokerage account. That's the
Okay,
problem.
so then if it's in an individual brokerage account, then it doesn't matter. Most people, though, are plowing it into an account where they're going to get a 10% penalty if
Well,
they
that's what I
withdraw
mean.
early.
That's why I've always been strategic, and people always give me crap. They're like, Matt, why aren't you maxing out your 401k? And it's just like, I don't think you understand the situation I'm in. I'm in a
Well,
very different situation than most people, right? I've done very
right,
well.
but this becomes a tax planning thing that I don't want to get into that you and I can talk about offline because at some point you also have to look at it as being able to max out your 401 and doing other investments at the same time gives you tax benefits also on an annualized basis, but that's a personal preference.
Yes.
So that's something you got also, that's a separate conversation we can talk about offline. But I do hear what you're saying.
This discussion's boring. We're talking about printing money, but yeah, it's boring.
Well, look, I have a different philosophy on what is realistic and what isn't realistic. And when you look at the data, the easiest way to build wealth is to invest
Save us
in
a
an
lot of
index
money.
fund.
Yeah,
I mean,
save us a ton of money.
it's not easy to get double after double after double after double about double. I mean, the S&P has been a surefire way to be invested in the best companies, and over the long term, it has a great track record, and you still get the compounding from the dividend, plowing that money back in every year. And the power of compounding is real.
Yeah. Yeah, I think I just need to sit and be like, okay, well, if it actually is going to go up 8 to 11, 12%, like you're thinking, where do I want to be? Because I'm at the goal that I thought I wanted to get to. Like I was really only just looking at what was in my individual brokerage account, and obviously my 401k is also in the S&P or an S&P equivalent. And I added it together, and I'm like, oh shit, I'm way further along than I thought I was. So
It's a great way thing to be.
no, it's definitely a good thing. But I'm like, at what point do I say, okay, that's my oh shit fund, and I don't want to say play Monopoly, but
I mean, look, the reality is you don't know what's going to happen in the future. So that's why I say I wouldn't limit what it is.
yeah,
That's why I say just plowing it in because you never know what's going to happen in the future. And the more you have, the more secured you're going to be.
dude, I run, no offense, I've talked to financial planners and I generally run circles around them, and maybe that's overconfidence.
No, it's not overconfidence because guess what? I will never use a financial planner, and here is why. Because I'm going to say something that goes above what Matt just said, and I don't expect Matt to say this, but I'm going to say this. I'm not paying anybody 1% to 2% on my assets to manage my money. That will never happen in my lifetime. And the second that I leave the company that I am at, I am drawing that money out and I'm taking it out of that company and I'm managing it myself in a rollover 401 so I don't pay the asset management fees. Like, I'm sorry, nobody's getting 1% to 2% of my fucking assets. Not happening. Now, I will be glad to pay somebody, and I do have an account with one brokerage firm that they manage some money for me, but they trade and they beat the market. And the deal I have with them is I have no problem paying you your fee, but you have to beat the market every year or I move that money out. And they get me X return, which is always over the market. So they get their fee, but they are beating the S&P. So I don't mind paying them a couple of points because I'm coming out on top. But no financial planner is getting my money to what? Sit in mutual funds and ETFs, stuff I can do on my own? Not happening.
Yeah. Yeah, I don't know. And then I struggle as well. I'm like, what is enough? As well. And I'm like, I could keep playing the game of Monopoly and keep, but it's like at some point, it's like, how much fondling do you do? How much margin of safety do you really need?
Yeah, but it becomes what's your lifestyle, what's your bills, what do you have coming in residual income from dividends or properties or whatever, right? There's so many factors that go into that. So, and look, the reason I say that is just because I do more research than financial managers, most likely, and I can manage my own money. I have managed my own money and I've done pretty well. So it's not an arrogance thing, and it's not cocky, it's the reality. If you look at how many articles I've written on Seeking Alpha and you look at the amount of time I spend following stuff, I have an undergrad in economics, I have an MBA. This is what I do. Like, I follow the economy and I follow finance. These are my hobbies. I don't need to pay somebody to manage my money.
Hot Steve coming in with the real talk. Love it. I love it. Yeah, I need to. It's just something. It's like I don't want to say it's a blind spot, but it's like I've done that end goal sort of thing for all the stocks that I have in my portfolio, the individual equities, but I haven't done it for the 401k, and I'm like, shit. Like, I'm kind of upset that I haven't done it for my not 401k, for my S&P 500 equivalent, and I'm kind of upset that I never have, because I would have realized I'm a little bit further along than which is a good thing. But now that I'm further along, it means that, oh shit, I'm not planning the way that I thought I was. I thought that I was going to hit this target much later, like a couple
Yeah.
years down the road, and now I'm pretty much at that target. So I'm like, I need to raise the target, because, like you stated, I don't want to.
You don't know where inflation creep is going to be. Look, you also don't know if you're going to have a family in 5 or 10 years from now.
No,
Don't know.
100%.
You don't know if you're going to end up having kids or not. That changes things. Like, there are so many things. Like, if you're single, it's very easy to think in one very tunnel vision way. But if you end up deciding to have kids, now you have a whole different set of financial obligations in your life. So there's you can only plan for the future, a couple years. Like, you can make a long-term plan, but that long-term plan is going to adjust probably in 3 years from now or 4
But
years.
you can make a plan and God will laugh. I mean,
Yeah.
that's always the case, right? But
And here's the other thing. God forbid, like, I had a very close friend of mine pass away in June 30th, and left behind a wife and 2 kids. So you never know what's going to happen. So,
yeah,
anything
no,
can
that's
happen.
that's part of it as well. I told my one buddy, I very much admire him. I mean, I don't want to give his name out, but he's pretty. He's not an X or a YouTuber as like per se, but he's kind of out there, and he's made some good money, but he also spends it, and I'm like really kind of like, I sit there and he sends me videos and I'm happy for him, right? I'm not like, this guy's an idiot. I'm like, man, this guy's enjoying it, but at the same time, I'm like, am I enjoying it, or do I not really do that sort of stuff? Or am I just getting FOMO and being like, I should spend more, I don't know.
Yeah, and
I
look,
don't withhold much for myself. Like, it's not like I'm sitting there like eating PB&J sandwiches all the time, like I don't know. So
yeah, look, I get it. It is more making sure you are on track to meet whatever goals you have for your later self. And look, I'm seeing a bunch of comments in there. I am gonna respond/react to one of them. Sure, if anybody can sit there and say, if you can't if you can't get 10 to 15% and beat the market on an annual basis, you suck. Okay, cool. But what happens in a down market? What happens? It is so hard to beat the market consistently, and index funds over time to me, are a hedge against myself. Okay. That's why I have individual stocks also. that I've done pretty good at. But having a good amount of money in an index fund is a hedge against myself because I look at it as everything in my that's in individual stocks can go to zero because I do not know what is happening with these companies behind closed doors. Meta can go to zero. Matt jokes about it a lot, but it's the truth. Who thought Enron was going to zero? In all seriousness, it was one of the largest companies in the market and it went to zero. That can happen to any company. Now, it may not be realistic, but it can happen.
That's a
So
possibility. Yeah.
even if it's a 0.01% chance, it is still a possibility. So being diversified is a great thing. And for me, I don't want to own rental properties per se. Now, when we were talking earlier about potentially doing something together, that's something I would do with my friends and grow that. That's different because I have partners in it that I just want to do this with them. I don't want to be a landlord on my own. I have no interest in it. So for me, the hedge against myself is S&P 500 because all my other shit can go to zero. And I know that when I retire, I will be able to live off the S&P 500. Like it's a very rudimental way of thinking, but it makes a lot of sense.
Yeah, it does. That does, Hot Steve. Yeah, Steve's a good guy to go back and forth with. He's got his head on right.
I think it's more just got to make a plan and try to figure out and work your way backwards, you know?
Yeah. No, I mean, that's the way I always like to look at it. It's just, this is something I haven't, I feel like I always, for the other parts of my portfolio, I've been like, I want to get to this share count. I want to get to this share count. And I've gone from where do I want to be in 5-10 years with these things, but I haven't done it for the SPY. And I came up and I'm like, shit, like I'm way further along. I need to get more aggressive with my SPY because I need to up my target.
And here's something else, okay? And I'm just going to use a round number, okay? For every $1 million that you end up retiring with or whatever the end goal is, okay? Once you get to that age, every $1 million in the SPY is going to pay you 13 grand in dividends.
Yeah.
Okay. Is roughly you get a 1.3% divvy yield off of the SPY. So if you're able to, and look, not everybody's able to do this, but if you're able to have several $1 million in an S&P 500 index fund, you may be generating 26 or 39,000 a year just in that dividend. That does not include Social Security, and that does not drawing down on the principal. So it makes drawing down on the principal a lot easier because you don't necessarily need to draw down as much, which helps you with the rate of inflation and still growing the nest egg. Yeah. So there's also a reason when you think about it's not just about getting to the number, everyone, like real retirement planning. You have to think about what you are drawing down because you cannot keep it there indefinitely. You have to start taking money out at a certain age. Like if you look at a minimum distribution table, you have to take out every year. So you want to make it, at least I want to make it, where when I'm drawing down on the account, it is actually still growing and it's actually not drawing down at as quick of a rate. Like that's my end goal.
Yeah. No, I think about that. I'm like, because at that point, I'm like, well, let's just say I want to keep it at 3.5%, because 4%, people say, okay, well, in some scenarios you can run out of money, and that 4% generally is if you're not adding any money into it, which for me, I probably would be adding money into it because I'd still be doing YouTube or something that would generate some sort of income. It just might not be a full-time 9 to 5. And then, so part of me is just, yeah.
So I want to find a table, but so the RMD.
These are the type of people that go broke. I don't know who this gentleman is. sorry, Steve, he's like a good follower of yours, but he's like, yeah, but Steve, you have 500K invested and you return 60 grand a year, get 300K return a year.
What do you mean?
He's trying to think that like 60% return is like normal.
I mean, 60% returns are not normal. I mean, I say it all the time. So, look, if you can get 60% a year, I will freaking give you money and I will sign a waiver and you can trade for me. But if you lose my money, you got to pay me back. Like, I don't know anybody that can get 60% a year. Like, I don't know. I can't. So for some reason, I can't find a table right now. I don't know why. But the minimum distribution is the second half that you really got to account for. And then you got to think about how do you want to use your money in retirement? Do you want to leave money if you don't have kids and you're single, where you want to leave money? Or if you have a family, how do you want them to be when you leave? So there's a lot of things to think about.
I'm just trying to be like,
Look, it's a complex thing. It's a very complex thing. And my problem with just blindly trusting financial advisors, and I get it that they're supposed to have your best financial interests at heart, and I'm not saying that they don't. I've read through the books. I mean, I don't agree with everything that's in there, but that also doesn't mean that I'm not correct. I mean that doesn't mean that I'm correct. I could be very wrong, but I have my own plan of based on data. Everything I do is based on data. I wish Chris Hager did not take that name because I would have loved to have used data-driven investing as my handle because everything I do is based on data.
Did he change it? Maybe you could steal it.
I don't know.
I see.
I'm certainly not changing it now, but I mean, the reality is there is, for me, a spot for individual stocks. There's a spot for speculation. There's a spot for dividend stuff, but a good portion is on another side that I know over time is not going to blow up my accounts. And,
data-driven investing is not taken.
No, I'm not changing it. I mean, okay, so if you bought, yeah, how about this? I've owned Meta since 2011 or 2012, since the IPO. I have large gains in a bunch of stuff. I get it. But once again, if you're looking on an annualized basis, is NVIDIA going to return 60% next year? I don't have a crystal ball. I can't tell you yes or no, but the probability is that NVIDIA is not going to return 60% next year. So I also have a good position in NVIDIA. So if it does, I'm golden. Like, I hope it does. But once again, to me, and look, that's why I'm saying I could be wrong, but for me to help me sleep well at night, having a good amount of S&P helps me sleep well at night because over the time frame that I am sticking with, I think that it will be worth X, especially at the rate that I'm contributing. There's nothing wrong with that. That's not going to work for everybody, and that's fine. But make sure you look at minimum distribution tables and make sure you talk to a good CPA. Like, that is something that a lot of people do not do. Have real conversations with a CPA.
Very true. Happy New Year to Central Time Zone.
I can't believe it's 1 a.m. Holy shit. That's crazy. Oh, beef tenderloin for dinner. That's yummy. I think I'm going to make a big freaking steak tonight. I mean, not tonight, tomorrow night. Yeah, tonight. It's 1 a.m. tonight. It's morning right now. You know, I should have some freaking, I should have steak and eggs delivered to me.
Boss man. You should.
Sure.
The city that never sleeps.
This is true. This is true. Yeah, 2 hours to go. I can't stay on for 2 hours, guys. I need to function tomorrow. Trying to write some articles tomorrow. Do a stream tomorrow. What are you doing tomorrow, Matt?
I'll be flying home, man.
What time? What time's your flight?
5:50, I think,
In the
And
morning
then-
or at night?
at night, and then landing around I think 8 something. So,
Ooh.
and then I'm trying to decide if I'm going to work on Friday or not. Technically, I have work that day, so part of me is thinking, do I just work, and then I think I might. There's some tiny home / little cabins. They're not cabin makes it seem like it's like rustic, but some like nicer cabin like homes north of Houston that I might go check out for the weekend and just get out of Dodge for a little bit.
I hear you. Nice. Very
Um,
nice.
but yeah, apparently we need to give all money to this David Tobin guy because he's the future. He knows what he's doing.
Yeah, I mean, you know,
Billion%.
anybody that can get me those types of returns and guarantee those returns, I am happy to speak with.
Steve, as always, I think you're a good man. I think I don't know. What are you trying to call it here, or what are you trying to do?
Yeah, I want to stream tomorrow. I plan on making a video tomorrow morning and putting it out.
I think it might be your best video yet.
And I am planning on doing a rant about credit cards at some point because I listened to some of everybody's favorite guru and I can't fucking stand it. Can't fucking stand it.
Who,
Uncle Dave.
Uncle Dave?
Yeah, I mean, look, here's my thing. Everybody is an adult, and just because some people can't control themselves, you should not condemn freaking everybody and tell everybody across the board that credit cards are evil. Like, nobody's making a credit card swipe itself. Okay. It's the same thing with eating red meat or drinking too much, like everything in moderation.
Yeah.
So if he said, and I would be fine with it, but if he said, look, if you're able to manage it and promise that you are paying it off and you're not getting charged interest, it is a tool that can be used for financial literacy and to financially get ahead. But if you use it the wrong way, it can crush you. It's just like going and benching and throwing too much weight on the bar. You can blow a rotator cuff. It's called no shit.
Yeah.
So I just
No,
don't like,
he's very absolute.
I
Unfortunately,
don't like being absolute because it's not realistic. Like, just because some people are lactose intolerant does not mean that other people can't drink milk.
Mhm.
Just saying, like, it's just, there is no one size fits all, but there are a lot of people that credit cards are fine for. And some people should never have a credit card. I agree with that. But that doesn't mean everybody. Here's the other thing. The segment that I watched, they were talking about how they read through the studies and you have to look about these vacations because the people that are using it for rewards for vacations, they're actually spending so much more just to get the points to get a free flight. It's like, yeah, no shit. And those people don't understand how to utilize a rewards program. But if you're paying a card off and you're doing the cash back and you're getting 1.5% back on an aggregate and you're not getting charged any interest, you're coming out ahead of the game every time. So when you think about a grocery store is not charging you a 3.5% fee for using a credit card. If you pay cash or use a credit card, it's the same price. So why am I going to use cash at a grocery store over a credit card? I want my points so I can get my cash back because I'm not getting charged interest because I'm paying it off. It just drives me nuts.
Steve, it's why they pay the big bucks, man. Telling you.
I'm just saying, like, it doesn't make any freaking sense. And especially for people like, yeah, like just like that comment. If you have a Robinhood Gold card and you get 3% back on everything, like, are you freaking kidding me? If you pay that off every month, think about it. And I don't care that $30 is not a lot of money on $1,000. I got to tell you, $30 is better than getting nothing back. I don't want to leave money on the table. And how do you feel about that whole thing?
I agree wholly with the absolutism or whatever you want to call it. Use what I guess my way or the highway sort of thing. It's like how I talk about investing. It'd be like me being like, everyone needs to follow how I invest. And it's like I just don't believe in that. I believe that everyone has their own areas of where they're at and their investment horizons and what they need and all that. So I don't know.
Yeah, look, some people should never use a credit card. Some people should never sign up for it. There are other ways to build credit, but for a bunch of people, and I don't know the percentages or anything, but I know a bunch of people that credit cards are great for. So I don't know.
No, I rarely have an issue. Rarely. I always pay it off every month. So
And here's the other thing. In all seriousness, if you're not using a credit card, have 2 checking accounts or 2 debit cards and only use one of them for purchases online, because I don't care what anybody says, really do the research. Is significantly different to get a reimbursement than on a credit card with fraud. There's a
Yep.
reason why, and that's all I'm going to say about that. But there's a lot of reasons why. That's all.
no, I've told that to many people. Every time I see somebody using a debit card, I mention the same.
Yeah, it's crazy talk.
Which is another reason why I think like the Ramsey thing is kind of crazy. It's like, you know, people have brought that up to him before, and he's like, "You're an idiot," and I'm like, "Dude, like you can't hide the facts." You know what I mean? Like
Right.
people have literally been like, "But
Oh, I would love to freaking have the discussion with them, especially look, that's a great comment. Good luck traveling abroad without a credit card. Visa gives you the exchange rate on everything you do. Like everything's done for you. Like, what are you talking about?
yeah,
It's crazy.
I don't know how, Steve, but you're the man."
No, you're the man.
I'm gonna hit the sack, I think, and it's good chatting with you. I'm looking forward to a good 2026, and looking forward to seeing you in about a month's
Yeah,
time. It'll be a good time. I need to book those tickets, but I need to fly in the night before. Not the night before, you know when, but
Yeah.
that'll be. Maybe I need to talk to Doug, see when he's flying.
I would talk with Doug because Amit and I talked. We're planning something for the day before. So
Okay. Yeah,
so
I need
make
to.
sure you hear the day before as we're planning something for it.
Happy New Year, everybody! I really appreciate you guys. Yeah, Ray's gonna fly me out. Did you ever hear that story, Steve?
What story?
So when we were going to Miami, did I never tell you this? Jesus Christ!
I don't think so.
So when we were going for Miami, you know, Maddie was on Demon Time one night. If you know what Demon Time is, and so Maddie was on Demon Time one night, and I forget where June had this WhatsApp group that had a bunch of random people in it or something like that, and there was like a bunch of. I shouldn't say this out loud, but I'm going to. Happy New Year, everybody.
You don't have to say it. So
No. But I was like, I was on Demon Time, and there's, women in there that were like, I don't know if I'm coming, whatever. I'm like, look, if it's really that big of a deal, I'll buy you a ticket to come out to Miami, because like tickets to Miami aren't that expensive. So I was like, I'll fly you out. It's not a big deal. And what was it? And then I got a message like a couple weeks later, and like they were like, Matt, like, are you gonna fly me out? And I was like, what are you talking about? And anyway, maybe I shouldn't say this, but it was just anyway.
Well, it's not. How about what's
It's
not?
not. It's not. I don't want to embarrass anybody, which
Let's
I already
not
probably
say
did.
it.
But it was pretty funny. That's all I'll say.
Let's not say it. All right. Well, appreciate everybody being here. Hope everybody had fun hanging out with us. We've been on for 4 hours and 40 minutes. It is 1:11 a.m. Everybody make a wish. Hopefully, everybody has a great 2026. I will be back on tomorrow, probably video in the morning, getting uploaded, and then I will be streaming at some point. I am not sure if I'm going to be streaming during the day or at night. I got to see what's going on, but really appreciate everybody being here. Hopefully,
Awesome.
everybody has a happy and healthy new year. And see everybody tomorrow or whenever. See you guys again.
Thanks for inviting me, Steve. It was a good time.
No, thank you for coming. And then, Saturday night, come to the Saturday night stream.
Got to do it.
All right. See everyone later. Happy New Year. Thank you for everybody coming out. Spencer, Ray, Michelle, June, Chels. Let's see who else is still here. Dougie, Carnivore. Really happy that everybody's still here. Michelle bakes cakes. I mean, I still want cookies at some point.
Right here first.
Spencer, see you tomorrow. Thank you, everybody, for being here. Really, truly appreciate it. Have a great night. Looking to meet everybody at the meetup on February 1st. I will be there. And Maddie will be there too.
Yeah. See y'all then.
Later, everyone.